discount will come in this, but discount account also we are okay then. Then after we move into the business bank account capital. Bought goods for resale on credit from there, purchases and there. Trade rent by debit card, rent account. Sales on credit to Yash, sales and Yash. Sales and Yash. Put cash to the bank account contra, so you can put cash to the check. Paid Dev money owed by check after deducting 5% cash discount. So you have paid, so you have received cash. So cash discount received. Put in discount. Received. Account. So they were bank, for example, paid for stationery by cash. Stationery. So how many accounts we need to prepare? 1, 2, 3, 4, 5, 6, 7, 8, and 1 cash book. So cash book, this is ledger account as well as book of private entry. So this is, so first we'll prepare cash and bank account. So then we'll prepare all these accounts. Simultaneously we'll prepare everything. Okay. So this is a comprehensive problem. So if you are not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all these things. So you can focus on this, and you can get a clear picture of what has been done till now. So let us start. First October cash 1,000, 2,500. When 2,500. First October. Cash. Cash 2,500. So it is balance product. Balance. Jana put her own money into the business bank account. Own money. Okay. Own money is nothing but capital. So Jana has put her own money into that. So money is coming in back. So money is coming in back. So what this is first. It is on first itself. First. So money is coming in back, giving bank account. And who is the giver? Who is giving it? So it is capital. So complete the entry. You are right here. So one. So it is back. By back. You receive through back. Next. Bought goods for resale or credit from sales. Purchases. Purchase. purchases from unit, they are all valued. They are all valued. So again, this you have to write here. Again, this you have to write this. So that it is complete. Next, paid rent by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as bank payments. Rent 1,000, debit card, bank, rent and bank. What date it is? Second.
Hello.
He has gone from bank. Yeah. So rent amount.
Walaikum assalam.
From bank. So we click on there. So next. So we have to record it. The opposite side in red.
So what will do to do? Okay, send it.
Okay. So through bank we have paid. So rent account is an expense. Nominal amount always will be. Next. Sales are credit to Yash. Sales and Yash. Sales are credit to Yash. Sales. What date? 4th. Sales are credit to Yash. Sales are credit to Yash. Total amount 8,000. Credit. Sales is always credited. So Yash. So opposite side. Yash account will be debited. Why are we debiting it? Because we have sold goods to. Because it's with the receiver upon that receives. Yash account receives. Debit account that receives. Next. So cash sales 700. So what is happening? Sales is happening and cash is coming. What date? 4th. Cash sales 700. 4th. Cash sales. Cash sales means money will come in cash amount. Sales. So we are receiving money in cash through sales. So sales account will be debited. Sales. So cash. How much? 700. To what date? 4th. Paid cash into bank account. Paid cash into bank account. Bank account date. 5th. Paid cash into bank. So cash into bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. On date. 5th. Cash is paid cash into bank means money is coming in bank, but going out from cash. So here, so it is cash payment and bank receipt. same date, same time. So against this, so money is going out from cash and coming in bank. So against this, your credit bank. So against this, your credit cash. Next, paid the money owed by check after deducting 5% tax. So whatever money you have to pay the day. So you have got 5,000 for goods worth 5,000, and we have to pay after deducting a discount of 5% on 6th. We have to pay. So how much we have to pay? 5,000, 5% is 250. 2,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th, we have paid here. Discount received is 250, and money is going from bank 4,007. So to whom we have paid? We have paid to Dev. So to Dev when we have paid on October 6th.
What do you have to do?
We have paid bank 4,750.
Question number 7.
Discount received.
Okay. So you say that day you asked me, no, this one. You asked me.
This we have to transfer to discount.
Yeah, you asked me this.
Received amount.
7th one. 10.3.
Discount received.
Wait.
What date? Only about 6th. October 6th.
10.30.
So we have to. So next, paid for stationery by cash. Paid for stationery by cash. Is what?
Okay.
Which is
So
on
now
6th. Paid for stationery by cash.
what is the first entry? Goods are sold on credit amounting to 40,000. So debtor to sales, this is correct. So paid to creditor 22,000 by check, creditors to bank. This is also correct. Goods worth 7,000 were returned to his supplier. Supplier to purchase returns. This is also correct. Paid salary 15,000 by check. Salary to bank, this is also correct. So general is correct. Okay. So now what you have to do? You have to open ledger accounts for all this. Debtor. See what mistake you have done. You see the trial balance. If you see the trial balance, there 2,40,000 is there.
October 6th. So through cash, we have paid stationery. Cash stationery account is always debit.
See the question here.
And we have to credit cash. So because cash is going out, debit stationery utility cash.
See, this is the question, right? So this is the question, no? So this should be the opening balance. 2,40,000. You have to write it as opening balance. To balance brought down your debt. It is because it is debit balance, no? So debit balance means it will come this side. So to balance brought down you write here 2,40,000. So if you write 2,40,000 here, this will become 2,80,000. Make the changes one first.
Plus 10,000. And this side it is 1,000. 4,750. It is 5,750. 10,000 minus 5,750.
Debit side here, it is debit balance, no? It is on debit side, no? Trial balance, it is on debit side, right? So in ledger account also, debtor also, you have to write it here. To balance brought down, 2,40,000 you have to write. So this will become 2,80,000. By balance carried down will become 2,80,000. So that will come in trial balance, new trial balance.
So if you write down, you will get 5,750. So 10,000 minus 5,000.
So this will become 2,80,000. By balance carried down will become 2,80,000. Why you have scratched? Why do you scratch like this here? After you write, you will scratch. Why do you do that? Huh? You only write in, you will only got confused, you will only scratch everything and you will only do everything. Why did you write then?
4,250. You have to write here. 4,250. You have to write here. So that total on both the sides becomes same. So this side is also 10,000. This side is also.
So now sales account. Sales account is what balance? Credit balance, no? Trial balance, you see, sales is written on credit side, no?
This is called balance carried on.
So here you have to write by balance brought down sales. Where here in sales account, by balance brought down sales is 10,50,000. So below that you have to write debtor 40,000. So the total will be 10,90,000 balance carried on. 10,90,000. Change it.
So here it is 530. 1,700 minus 530. 1,700 minus 530. 1,170. So you write down 1,170. So that the total on both the sides becomes.
Yeah. No, it's not two. It's not two. It is by, because it is on the credit side.
This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and variable accounts, because they will be carried forward for the next accounting period. So cash capital account is 8,000. Balance carried down is.
By balance brought down 10,50,000. Two balance carried down will be 10 lakh. After you write 40,000, it becomes 10,90,000.
So only the date switches. Here it will be October 7th. Here it will be October 8th. Or October 7th. Balance.
Write down, yeah. Why you can't write?
So purchases amount 5,000. So there is no balance.
Write it on the credit side, yeah. Balance brought down will be, you write at the beginning, no? You have written.
So there here also 5,000. Here also 5,000. So there is no question of balance.
See here, this is the. So here you write. Here you write by balance brought down. You can see, no, where what I am bringing. Here you can see, no. No, let it be. Let it be. Above that you write, because that will come. That side, that will come. You are not written the opening balances. So there, above that you write by balance brought down 10,50,000. So this will become two balance carried down will become 2,90,000. That's all. Hmm. 10,50,000. Yeah, you see the trial balance. How much is there?
So balance carried down.
Where?
3,000.
How much here? How much it is written?
So this will be brought down again.
Where? Yeah, 10,50,000. See properly.
So discount received is 250. This will straight away go to.
Then.
Stationery is 330.
Why are you saying your notebook?
So this is the end. This is what else we need to do in this. So balance the accounts.
10,50,000. To that, when you add 40,000, it will become 10,90,000. So this will become 10,90,000. Not this side. Here, this side it will be two balance carried down will be 2,90,000. Why did you write by balance brought down? By balance brought down will be 2,90,000. I mean 10,90,000. Here it will be 40,000. why did you write here? What here? Why here also you written brought down? Here also you written. What is this here? So by balance brought down 2 lakh 10 lakh 50,000 by data 40,000. So total will be 2 lakh 90,000 10 lakh 90,000. So two balance carried on will be 2 lakh 90,000. So by balance carried on you have to write here after leaving one line you have to write by balance brought down. It will be 10 lakh 90,000. Next creditors. Okay. Hmm. What you did? That is not the only correction. Everywhere you have to correct. Yeah. Correct. Correct. So here two balance carried on. Two balance carried on will be 10 lakh 90,000. By balance brought down will be 10 lakh 90,000. So now come to next one, creditors. So creditors is credit balance. Which side? In trial balance you see where is creditors? One lakh 80,000. So you write here. So in balance, by balance brought down you write 10 lakh. I mean 1 lakh 80,000 you write. 1 lakh 80,000. Yeah, 1 lakh 80,000. Creditors is 1 lakh 80,000 no in the trial balance. Credit balance no. So by balance brought down 1 lakh 80,000 you write. So after you pay 2 lakh 20,000, how much will be the balance? Stupid fellow. 1 lakh 80,000 minus 22,000. 1 lakh 80,000 is here, right? This side. So bank is 22,000. What will be the balancing figure? Ah, 1 lakh 80,000 minus 22,000. How much? So you write here two balance carried down. Why did you write brought down? Two balance carried down. 1 lakh 58,000 or 48,000, whatever. So you write that. How many times I told you that both the sets it should be total should be same. So balance brought down. So this is how we have to do. So by balance brought down you write 1 lakh 80,000. Two bank will be 22,000. So this minus this whatever you will get you write here. So that will become balance carried down. So that will become carried down. So that will become brought down again in the next period. Okay. So wait 1 minute. Everything you want me to show on the board, huh? So by balance brought down 1,80,000. So this plus this will not be here. So this minus, so two bank will be 22,000. 1,80,000 minus 22,000 is how much? 1 lakh. So 1,58,000. So total both the sides will be 1,80,000. Always I told you when you write the ledger, always you have to put the total. So this one, two balance brought down will become by balance brought down. So that will be 1,58,000. This is how you have to show it. Next, you prepare bank account. No? Wait 1 minute. Which one? No, everything you have done wrong. Bank account also balance will come. What is the balance? So here bank account you don't write here. You write in the end. Don't write here. Wait 1 minute. So let us see the next entry. Return to supplier. No. So where is supplier account? Supplier is what? What do you mean by supplier? So what is the difference between supplier and creditor? What you are telling here? Remember, think. Who is creditor? What is the difference between creditor and supplier? Creditor and supplier are one and the same. Creditor itself is the supplier. So when you return him, where the entry will come? What will be the entry? Supplier account debit means you have to write this side only, no? To sales return, to purchase return here, to purchase return. Okay, so how much? So 7,000. 7,000. So now this balance will become 1,51,000. Creditor or supplier is one and the same. Creditor is the supplier, supplier is the creditor. So when you write here, this will become 1,51,000. Can you see the screen? Okay, so you have to write like this, make the changes. Two purchase returns, 7,000, two balance, so balance carried on, no, to balance carried on will be 1,51,000. So to by balance brought down will be 1,51,000. So this will change. So here it will be 1,58,000 itself. Total will be 1,58,000 only. So here no, not 1,58,000. How much? 1,80,000. No, 1,80,000. Both the sides it will be 1,80,000. This side also 1,80,000. This side also 1,80,000. So the balance carried down will be 1,51,000. Two balance carried down will be 1,51,000. Two balance carried down 1,51,000. So you have to write here. Two balance carried down 1,51,000. You have to write here. So this by balance brought down. It will become by balance brought down. 1,51,000. Done. Did you understand? What is the difference between creditor and supplier? Yes. Purchase returns. Purchase return. You just see trial balance. Is there purchase returns? Is there in trial balance? There is no purchase return. So here there is no balance brought down or anything like that. So directly you have to write by supplier, that is correct. So to balance carried down 7,000, 7,000, purchase return 7,000. This is correct. Purchase return is correct. So purchase returns will be credited. So balance carried down, balance brought down will be 7,000. Now salary. Salary, is there salary account in trial balance? Just see if there is salary account in trial balance. How much is there? So you write here to balance brought down, to balance brought down 1,65,000. 1,65,000. You write down here. So when you pay again it will increase. So this will become 1,65,000 plus 15 will become 75, 1,80,000. So this will become 1,80,000. So balance carried down, balance brought down will become 1,80,000. Understood? So now bank balance, cash in hand, bank balance. You see bank balance how much? 45,000. Correct. In the trial balance you see 45,000 is there. You. So bank balance, two balance brought down. So you write here two balance brought down. Which side it is? It is on the debit side, no? Debit balance means you have to write on the left side. This side you have to write. So two balance brought down how much? 45,000. From that you pay 22,000 here, 15,000 here. So this minus this is how much? 45,000 minus 37,000. 8,000. So 8,000 you have to write here. By balance, carry down. It's not brought down. So carry down. Here it is brought down. So it will become 45,000 this side also. 45,000 this side also. So this will become by balance brought down. So here no sorry. So here it is. So this will become two balance brought down. Two balance brought down. So 7,000. 7,000, 8,000. Two balance brought down 8,000. Okay, now you read out the trial balance. Read out the trial balance means capital account will be same, fixed assets will be same, drawings will be same. Debtors amount will change. You have to take from now whatever you have written. Creditors, you have to write the new figure. Purchases will be same. Sales will increase. Sales there is no new figure. Bank balance will change. New balance will come. Cash in hand goes same figure. Salary it will change. 1,80,000. Rent will be same. So everything will change. Certain amounts will change. Certain amounts will not change. Then you read out the trial balance. Did you understand? Do it count first.
it is the Lee who is giving. So Lee account. Bank account, debit account. So money is coming in bank, and Lee is the person. Lee is the accountant. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank, and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When Lee pays the loan, Lee will receive. So Lee account will be same. For debit, the account will receive. So B is specifically here. This account is very important account. You are doing very excellent. So then purchases paid by debit card. So whether it is debit card or check or what, always there is money will go on from bank. So purchases account debit to bank. Bank account, because money will be out. When you pay out from bank, debit card always money will go out from bank only, because unless you have money in bank, money cannot be debited by bank. Sold goods and bank the day. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is the revenue. Sales is the revenue. Sales is the credit. So credit or income will be the revenue. Return goods to supplier and bank the refund. So we are returning the goods to supplier. So supplier is receiving. So we will debit. And money will go out from bank, because money is given on a bank account. So refunded money to customers paycheck. So see, return goods to supplier and bank the goods to supplier. What is happening? You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving. So credit the receiver, debit the receiver, credit the receiver. Debit to, yes, but return goods to supplier and bank the refund. Bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debit. Bank account will be debit. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase return. It is called purchase return. Correct? No? It is purchase return, not supplier. Not. It is not. It is purchase return. Purchase. So refund money to customer by check for goods received. So it is, this is sale. So when we have sold the goods, but we have received that. So it is exactly reverse of sales. Sales, sales return, and it will credit bank, because money will go out.
Why?
So carriage inward statement, whether it is carriage inward or carriage inward, you always.
Why will you change capital account?
So carriage.
Did you read out the trial balance? Send me again. Trial balance to send me.
So carriage outward. So carriage outward is also receiving. Whether it is carriage inward or outward, it is always receiving. So money will always go from that.
Mm. So capital account is 3,20,000. So this is correct. Fixed assets is 1,80,000. This is also correct. Drawings is 60,000. This is correct. This is correct. This is correct. Debtors 2,40,000. Debtors. Why did you write 2 lakh? For how much you have written here? Dude, debtors. So what did you do till now? You added 40,000. No, how much is it then? Now balance carried on. Whatever balance carried on you wrote, that should come here. Write it. Change it. 2,80,000. This is 2,80,000. Creditors. How much? 58,000. 1,58,000. Creditors 1,58,000. Purchases is 7,10,000. This is correct as it is. Sales is 10,90,000. Correct. So bank account has changed. How much it is? How much? Huh? After you did everything and after you prepared all the entries, how much balance carried on last? 8,000. No. Why are you going to the old figure? Why the hell did you write the ledger account again? Because it was wrong. That's why you wrote the ledger account. So here, this is 8,000. You have to write it as 8,000. Cash account 1,65,000 as it is. Salary account 1,80,000. Rent account 1,20,000. Purchase return 7,000. Now you add and see. Now you add. Just for one simple problem, you are taking so much of time. Huh? That is why you prepared trial balance no? Again. So wasting entries and all we put. No, 15,68,000 you have to get. So we are going to 1,80,000 plus 60,000 plus 2,80,000 plus 7,10,000 plus 8,000 plus. What is 1,65,000? Cash is 1,65,000.
So basically, so no bank account is involved here. So
what did you write here?
other than cash, cash transactions. How to record credit transactions? This is credit transactions. So
30,000.
no money is being received or paid.
plus
easier there to find out.
30,000
You would have found
plus
one
1,80,000.
but here it is
Salary is
somewhat
1,80,000 plus
it is somewhat complicated. So
1,20,000.
it's easy if you understand the main concept.
15,68,000. You will get.
So basically we need to know
Credit side check.
the personal account.
3,20,000 plus
Whether
1,58,000 plus
so we need to know this. So purchase
10,90,000 plus.
So when we purchase food from Tina is the amount that is right.
Why 7,000? 7,000 why the income? Why
is the amount that gives.
Purchase return has to come more. 7,10,000.
Okay, when we purchase, obviously Tina gives.
Purchase is 7,10,000. Purchase return. Purchase return if it is credit card.
So
What should be
what you
debit
can do
card?
is you can try working out this question on your own. So then you can compare with the
7,000 has to come.
answer. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account.
So then it means
So we need to
creditors amount is different. Creditors rate permanent. How much is creditors amount here? We change no here. What happened to it? Creditors, you just see here. Wait 1 minute.
So purchase account, Tina account. So then so much to earning.
Creditors account, wait 1 minute.
Ali account.
How much did we change it to?
Return goods to Tina. So return goods to Tina means we return only those goods which we have purchased.
See here on the screen.
Purchase returns.
How much is it? This one. Dude, this one 1,51,000. No, 1,80,000 is balance brought down. You return, you paid 22,000. You return 7,000. 1,80,000 minus 22,000 minus 7,000. How much?
Because sales account is already there. Homer account. Return goes to Tina.
22,000
Tina purchase returns again. So
minus 7,000.
Ali are sold to
How much?
So have been returned means we have received that. So it is.
How much did you write here?
So basically we need to prepare 1, 3, 4.
Now it will tally. Give it. What to total? 1,000. You are getting 7,000 excess. Now it is correct.
Basically we need to prepare 8 lessons. So let us proceed. So let us start with purchase account.
So that is what is the answer in the textbook. You see. Just one simple thing you are taking so much of time, huh?
So always the ledger should be.
Okay, what is the next one we have?
The date and the
Question 8. What doubt you have actually? So you have to prepare the trial balance.
So purchase account is always an expense. So purchase account is
First you
always
prepare trial balance. No, what does it say? What is the question? Just read the question once again.
so that the logistics will be clear. So how much, what is the worth of goods you have purchased, and it is on October 1st, 2000. October 1st.
Where is it? It's there.
So purchase is amount debited with 2000. This is what it means. So a lot of students, what they get confused. So
We are not completed it, sir.
If they have debited, no, it is not like that. Purchase account debit means purchase account is debited. With whom?
Wait 1 minute.
You have purchased from Tina.
Let me just check whether you done correctly or not.
So Tina.
So cash in hand is debit balance correct. Plant investment is debit balance correct. Typewriter is debit balance correct. Stock is debit balance correct. Purchases is debit balance correct. Carriage inward. Why did you write here? Carriage inward is expense only. No? Why will it be credit? Carriage inward or outward it is always an expense. So it should this also should come here only. 2800.
So this side is always debit.
So this is wrong. Carriage outward 1600. Sundry debtors 18,200. Bills payable. So this is correct. This is correct. Sun bills payable 12,000 correct. Bank overdraft credit balance liability correct. Capital always credit correct. Goodwill always debit correct. Creditors credit correct.
So Tina account is credited. See, this is what. So a lot of
Sales account credit.
So Tina account.
Return inwards.
With what?
Return inwards means sales returns correct. Drawings correct. Investments correct. Rent paid correct. Wages correct. Advertisement correct. Discount receipt correct. So everything is correct. Now you total.
So here you have written 2000, here also you have written 2000. See, debit 2000, credit 2000. Obviously, debit is credited, and one account is debited, another account is credited. So this is what is the first thing you learn in accounts, like one should be debited, the other account will be credited. So this is debit. So next, coming to the next. Sold goods to Ali for 1,300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd. Date. October 2nd.
3 lakh. No, yeah. See the answer.
Sales is a revenue. Sales is always created. Wait for income and gains. Sale is always created. Sale account is created by this account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we got in this. So Ali receives. So that is why we have to debit. So debit the account that receives. Credit the account that receives. So this is
Okay.
everything we should understand.
Now it's correct, no?
So
Okay, what is the next step?
personal accounts. Rest of the account they do easily. So nominal accounts expenses they write off as an expense. Income account they write off. Revenue account they also write. Assets account debit what comes in there, what comes out that also they write. But in personal account they miss. They get confused. They think from the point of view of
No, that's all, isn't it?
business, but they
No.
try to think what Max is doing, whether Max is giving, Max is receiving.
So what I advise you know, you just work out illustrations from bank reconciliation statements and bills receivables. You just practice those.
So this is what this is very important.
Okay, just practice illustrations. These two lessons, no, you don't try to do the practical exercises unless you practice the illustrations thoroughly you have to practice the illustrations, then you try. Otherwise, you will not get this. These are very tricky, you will not understand. Okay, just to practice illustrations from bills of exchange and bank reconciliation also we can. So what you do? Bills of exchange. No, why she is doing like this? Yeah? She is doing in a rush and she is not finishing all the problems. She is not explaining. She is giving tough questions. What is this? What is going on? I don't know. What is she doing? Why she is doing like this? I don't really understand. How can you do without she doing the full problems without proper explanation? Uh, without understanding, how can you do here? There is no method here. Each and every problem is different. How can she do that? She has to be. Why did I ask you to do each and every problem? Why am I asking you to do each and every problem? Yeah, they are different. They are not same. They are not monotonous. They are not same. So it is not like a cash book problem or any journal entries. Even journal entries, there will be no different journal entries will be there. Subsidiary books we did in one day because it was easy. Cash book, sales book, it is the same format you do it. Sales purchase book, it's purchase book, it's the same format you do it. Purchase return, you do it in the same format. It's the same format. You have to just plug in the figures. You have to just write it in a proper form. That's all. But these are not like that. No, these two lessons are very tricky. Unless you understand everything, you cannot do anything. Yeah, you cannot finish it. Ah. So what we'll do now? Subsidiary book. This one, ninth one. Okay. So withdrawn from bank. This is cash book. Paid service cash book. So this is sales book. So Surya Narayan returned 400 meters. So it is sales returns. Received full settlement from Manohar cash book. Purchase from Ganga Prasad. Purchase book. Sold goods to Vinita for cash book. Accepted bill for 10 days during the drawn by this is journal entry. Gave check of Ganga Prasad, discount allowed by him. So it is both cash book and journal entry. Paid to Sunil after receiving discount of 1%. So cash book and journal entry. Keshav Chen took 5 meters silk. So this actually discount, no, this is discount, correct. This is discount, this will go in cash book, not generally will not go. Generally will not go cash book. Yeah. For Ganga also and Sunil also cash book only. It will come in cash book itself. Mr. Keshav Chen took away 5 meters silk costing 100 per meter for personal use, drawings, general entry.
Why? Because he's receiving.
Paid rent by check, cash book. Received from Suryaman, full settlement, cash book. So, in full settlement of his account, yeah, cash book. Old newspaper sold for cash, cash book. Paid for stationery, cash book. Sold meters through donation, sales book.
Sales. Over amount is debited with sales. So now.
So received cash 40,000 from Dinesh and also received a bill received from him for the balance due from him. So cash book and general entry. That's all. Okay. So this one bills of exchange and bank reconciliation statement. You have to practice from illustrations. If you have any doubts, you let me know. We will have a class. Okay. Okay. Bye.
So when she receives her account will be debit. So Tina receives. Return goods to Tina. So it is again we have to return. So it is purchase returns. Purchase returns to Tina. So it is on 10. Purchase returns Tina. Purchase returns. Tina. Purchase returns Tina. Where is Tina? Purchase returns Tina. Why we have debited? Purchase returns. So next. All goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, sales returns and sales returns and so we have to credit him. So we have to credit Ali because he is the giver. Credit the giver. He is the giver of the goods. So October. Why am I crediting? Because of sales returns. So now sales returns. One more about sales returns. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount will be here and it is on 11. What is the amount? Pay. You are correct. sales returns behind it. So there is no more. So he has written everything. So sales returns account 300. We have to debit. Sales return account will be debited with lease account 300. So this is our system. Okay. So next, this is activity 2.2. So now what you can do, you can try working out activity 2.2. So below are the financial revolution for Ken's business. What the post the transactions to the ledger account. All goods are bought and sold on credit. Bought goods from take that cost 5,000 less trade discount of 15%. So sold goods will leave for 1,000. So return goods costing 500 less discount to take. So purchase from B that cost 4,800 from trade discount before trade discount of 20%. Paid the normally note. Paid B for goods bought on 15th November. Received full payment from B. So what you can do, you can try working out this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. Dear students, welcome back to Shastra's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Peng's or Peng, whatever. So business post the transactions to the ledger accounts. Okay, so post the transactions to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make a list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, Pinch account, Pinch account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, Tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to Tinge. So again you are returning the goods. This is return goods. So you are returning to Tinge. So who is Tinge? So it is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is a 45. So 45. 515 is a 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct, no? 45, so 55. 55. Okay. So purchase goods from B. So again purchase account is already there. So B. So cost 4800 less trade discount of 20%. So this should be recorded at 4800 minus 20%. So 4800 minus 20% is so 48. 3840. So 3840. So you have to record it at 3840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to T. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full will also be recorded in bank account. So how many accounts should we open? One, one, two, three, 4, 5, 6, 7. We have to open 7 accounts. So first you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 40 to 50, 4,000 to 50. Because purchases is an expense. So expense account is always debited 4,000 to 50. So date always you write the dollars. Amount you have to always write. Don't forget to write the dollars. And what is the date? November 1. And it is sold to it is bought from Tinge. So November 1. So see purchases account debit Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So Tinge account will be created. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next. The entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be created with purchases. So next. Sold goods to E for 1,000. Sold goods to E. Sales and sales account. sales amount and leave amount. So how much is sales sold goods to leave for 1000 and November 5th. November 5th. Okay. November 5th. 1000 credit to sales because sales is an income. So credit on income means so 5th. So leave because leave is the receiver of goods. So this side is always debit. This side is always credit. By default, this is always debit. This side is always debit. This side is always credit. By default. So dollar after 50. So 1000. Why are we debiting B? B because we have sold in sales. So we have sold in. So debit credit. Sales account will be credited because it's an income. B account will be debited because it's the receiver of the goods. Okay, then comes next. Next. Return goods costing 500 less discount to teach. So we are returning the goods worth 500, but after discount it is 455. So return goods means these are purchase returns. Hinge account is already there. Purchase returns, hinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have written? We have returned on 10th. November 10th. November 10th we have returned. November 10th. So while to whom we have returned? We have returned to Hinge. We have returned to Hinge. So Hinge. So what we have to do? We have to debit Hinge. Now we have credited purchase returns. Now we have to debit Hinge. We have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit Hinge. For always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V. And it is on 15th. 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 November 15th. Purchases account will be debited. 3840. 3840. So purchase account will be debited. 3840. We have purchased from where? Okay. So that's why we have to write B. We have purchased from B. So purchases account will be debited. Now we have to write into B. We have to open, if it is not there, we have to open B account. So when we purchase, B would have given us the bills. So November 15th. November 15th. So 3840. So why we are crediting B? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3840. Now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid we for whose bottle 15th November. So we have got only once. So we have to pay tinge. We have to pay we, and we have to receive from we. So receive 20th we have paid to tinge and we. 20th we have to pay. We have to pay to tinge and we. So bank account. Bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to tinge and we. How much we have to pay to tinge? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to Tinge. So we have paid 3795 to Tinge. Complete the entry. Complete the entry. How do we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to Tinge. We paid 3,795. So we have to pay to another person. We have to pay to B. We have to pay to B. So let us see. We have to pay to B. We how much we have purchased? We have purchased 3,840. So obviously we have to pay 3,840, and it is on November 20th. November 20th we have to pay. So 3,840 we have to pay. So what account will be debited? Bank account will be debited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away. 3,085. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1,000 from Lee. So we have received what date we have received? We have received on November 25th. November 25th. We have received 1,000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from we write from oh, that's it. So we have finished. What else is required? Below are the financial transactions for the business post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can so basically what you can do is you can try answering yourself. Then you can compare checking with the answer here so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account we have paid everything. So there is no amount left over. Sales account is created. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 405. Way account we have purchased, we have paid. So bank account we have paid, we have received. 2.2. This done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just by answering yourself, and then we can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be credited. Sale account will be credited. Dia account will be debited. Why? Because sale is an income, credit or income means, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods. Dia account will be debited. Buy machinery for use by business on credit from John's Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Giant Limited is the giver of the machine. Giant Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, the purchases are always purchases. So you can write purchases. And we have taken Allen is the giver of the goods, and that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recorded. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So these are what purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns we have received money. We have deposited in bank. So refund money to customer by check for goods returned. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So we will receive joint limited goods. Receive full payment from DER less cash discount. So we have received payment from DER, receive full payment from DER. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DER because she is the giver of. So pay Allen for goods bought less cash discount. So here we have to pay Allen. Allen is the receiver of money, so Allen account will be debited. So we are paying, so money will get from bank, and discount received is again discount received. So the amount we are not going to pay because of discount, so that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is also, this is activity 2.3, David Hopkins, the latest book. So dear friends, welcome back to Shasha's virtual classroom. This is practical practice questions from David Hopkins, lesson number 2, credit transactions. So which are the following transactions? So before attempting this, before having a look at these answers, you can try answering yourself, and you can just cross with the solutions with the discussion. So always get back to me in case you have any doubts by way of commenting there below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or coming. Cash sales, money doesn't go or coming. Payment to a customer. So when we pay, obviously money is paid. This money is credited. So bank account is credited because payment by a customer. Sorry, see, this is payment by a customer. Payment by a customer means we will receive, not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 50. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 50. So 170. So transaction will be recorded 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So it's a purchase. It is a purchase for Joe's, and it is in Joe's books means it is purchase. For in Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at gross 200. Never at 200. Never at 200. Never at 200. So this is the matter. Right. So purchases amount 170. Maria amount 170. This is the right answer. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay. the cash book and balancing the accounts. Okay. So Janan business has opening balances as first October government amount was in cash and 2,500 in the bank account. There are no balances on any other accounts. Okay, there are no balances on any other. She has the following transactions for the first week of October 1st. Jana has no money in the business bank account. 8,000. What? So, what is the ratio of credit from there? Credit limit, credit card, okay. Sales on credit to cash. Cash sales 700. Credit cash to bank account 900. Credit their money on which account immediately get 10% cash discount. Paid digitally by cash categories. So prepare the necessary accounts and cash book to record the transactions. Balance the accounts at first 7th October and bring down the balances. So first let us make out list of ledger accounts. Okay. So first let us prepare a list of ledger accounts. So Jana would have so cash account. So obviously opening balance cash account, bank account, or cash will be cancelled. So this will come in cash. Okay. So this is cash. So even discount will come in this, but discount account also we have to prepare. Okay, then now put a room money into the business bank account capital. Bought goods for resale on credit from their purchases and their paid rent by debit card, rent amount, sales on credit to Yash, sales and Yash, sales and Yash. Put cash into bank account contrast, so let's give cash to picture. Paid their money owed by check after deducting 55% cash discount. So you have paid, so you have received cash. So cash discount received. Put a discount. Received account. So they were at bank, that is what we paid for stationery by cash. Stationery. So how many accounts we need to prepare? 1, 2, 3, 4, 5, 6, 7, 8, and 1 cash book. So cash book, this is ledger account as well as book of price entry. So this is, so first we'll prepare cash and bank account. So then we'll prepare all these accounts. Simultaneously we'll prepare everything. Okay. So this is a comprehensive problem. So if you are not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all these things. So you can focus on this, and you can get a clear picture of what has been done till now. So let us start. First October cash. value. So it is balance product. Balance. Then Jana put her own money into the business bank account. Own money. Okay, own money is nothing but capital. Capital. So Jana has put her own money into the bank. So money is coming in back. So money is coming in back. So and what date this is first? So it is on first itself. On first. So money is coming in back to the bank account. And who is the giver? Who is giving it? So it is capital. So complete the entry. We are right here. Lower one. So it is back by bank. It is received through bank. Next. What we say on paid from the Jesus. Date is on 2nd October 2nd. Purchases is on debit. They are going to it. They are going to debit. So again this you have to be paying. Again this you have to be purchases. So the entry is next. Paid rent by debit card. So debit card is obviously money will go from bank. If your debit card is linked to bank account, so that's when money will go from bank. So we consider it as bank accounts. Rent on the debit card. Okay. Rent paid on the what date it is? 2nd. Money has gone out from the bank. So rent amount of money has gone out from bank. So we have to go here. So next. So we are recording the opposite side in front. So rent amount. So what was it? So this is mile payment. So mile means like what is an expense? Normal stock. Next. Sales on credit to Yash. Sales and Yash. Sales on credit to Yash. Sales. What date? 4th. Sales on credit to Yash. Sales on credit to Yash. Lower one. Credit. Sales is always credited. So Yash. So opposite side. Yash Automobile Limited. Why are we debiting? Because we have sold the goods to them. Because they still the receivable account. sales means money will come in cash form. Sales. So we receive money in cash through sales. So sales account will be credited. Sales. So cash. How much? 7. So what is 4,000. Paid cash into bank account. Paid cash into bank account. Bank account date. 5th. Paid cash into bank. So cash into bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. What date? 5th. Cash is coming. Paid cash into bank means money is coming in bank, but going out from cash. So here, so it is cash payment and bank receipt. So same date, same line. So against this, so money is going out from cash and coming in bank. So against this, your trade bank. So against this, your trade cash. Paid the money over paycheck after deducting 5% cash receipt. So whatever money you have to pay to them. So we have got 5,000 goods worth 5,000, and we have to pay after deducting a discount of 5%. On 6th we have to pay. So how much we have to pay? 5,000, 5% is 250. 4,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th, we have paid their 250. Discount received is 250, and money is going from bank 4,007. So to whom we have paid? We have paid to them. So to them when we have paid on October 6th. How we have paid? We have paid bank 4,570. Discount received this we have to transfer to discount received amount. Here it is discount received. What date? Only amount 6th. Over 6th. Right. So we are trying. So next, paid for stationery by cash. Paid for stationery by cash. So what? It is on 6th. Paid for stationery by cash. We have paid stationery stationery. Here, October 6th. So through cash, we have kept stationery. Stationery account is always debit, and we have to credit cash. So because cash is going out, debit stationery 230, cash. Now we have to balance. How do we balance? So what is the most important amount here is the cash. So basically what you have to do, you add all this. So 2500 plus 8000 plus 500 is 9.5 plus 10,000, and this side it is 1000 for 4750. It is 5750. 10,000 minus 5750. So what you have to do? You have to write down in pencil here. Write down what you do. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5750. Here you get 10,000. So 10,000 minus 5750. You have to subtract 1 from the other. So 10,000 minus 5750 is 1,000 minus 5050 is 4,250. So what you have to do? 4,250. You have to write 4,000. You have to write here. So that total on both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried on. So balance carried on. So this side also it is 1,700. Here it is 530. So 1,700. This side is here. You write down 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 530. 1,170. So you write down 1,170. You write down 1,170. So that the total on both the sides become equal. So this side is also same. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and real accounts, because they will be carried forward for the next accounting period. So cash capital account is 8,000. Balance carried on is so this will be carried on, two balance carried on. So will become by balance product. By balance product. So only the date sections. Here it will be October 7. Here it will be October 8. Or October 7. So balance. So then. So purchases account 5,000. So there is no need to balance. This is 5,000 itself. You have to just, this will directly go to the trial balance. So they were out. Here also 5,000. Here also 5,000. So there is no question of balancing here, because the total on both sides are same. Rent account. This will straight away go to trial balance. You have to write this as it is. Sales 3,700. This will go to sales account directly to trial balance. So if you want, you can just write the total. So this will go to trial balance. Yes, account. receipt is 250. This will straight away go to trial balance. Stationery is 330. 30 is straight away go to trial balance. So this is the end. This is over. What else we need to do in this? So balance the accounts at first and bring down the balances. Okay. This is how you have to do this balancing. So okay. So we'll catch up in the next class.
कब कब जाना है? हमें देखना है जाहिर है क्या उसके को बेस करते हैं वो ये करा दो कंप्यूटर में डाल के छोड़ा दो ना मालूम है नहीं देखा वो रहता है तो इधर अच्छा है ना देखे देखे सकते हैं भेज देना
कहाँ जिससे देना अच्छा है ना
अच्छा है ना पीछे
अभी क्या सूरत जिससे देना
अच्छा अच्छा ना
अच्छा अच्छा
दुबला पतला भी है देखे देखे सकते हैं तो किसका भी क्या चलता नहीं उसके देवरा इन्हें है ना जेठानी भी क्या भी है मिला नहीं कर सकते
का सूरत से दिखती है
मुजाहिद को भी उठा
सूरत बराबर दिखती है लेन देन का भी नहीं करते एक साथ
मुजाहिद को भेजो
हाँ
मुजाहिद को भेजो देखो देखो
भेजेगा
मुजाहिद को मैं भेजा नहीं
हाँ
मुजाहिद को मैं भेजा क्या
खास बिल्डिंग है कंकाना घर में दो बेटा का करते हैं दो बेटे दाल को एक बिल्डिंग करते हैं
छोड़ो देखे देखे जगह दे डालना में करवा ना के कैसे दे
लोग को
सकते
भी बड़ा आता है
ठीक है आजकल के जमाने में
नीचे घर में रखो ऊपर दो घर का बड़ा आता है एक एक बेटे को एक एक बिल्डिंग गांव की स्थिति है इसका कंकाना घर में बिल्डिंग करते हैं इंजीनियर
छोड़ो अभी क्या पढ़ा लिखा भी है
हाँ इंजीनियर काम में है करते
अभी क्या
मुजाहिद को भेजे क्या
मुजाहिद को भेजा ना मैं भेजा
तो भेजा बस ना सुनेंगे लोग फोन करिए सुबह तुम्हारा भी कुछ खाया सब बोलो
is David Hopkins' latest book. This is from David Hopkins' latest book. David Hopkins' latest book. So complete the entries for the following table with information taken from the account subject result. So name of account to debit, name of account to credit. So what you do basically you start with your own. You see the question and answer yourself. Then you can compare with the answers. Okay, paid rent by check. So what is happening? Paid rent by check. Money is going out. So money is going out means credit what goes out. So credit what is given away. So it is bank. So money is given to bank. Bank. So we are going to bank. Paid rent. So rent is an expense, right? So rent is an expense. Debit or expenses. So postage and stationery paid bill. Again, money is going out of bank. So postage and stationery is an expense. So debit. Postage and stationery only. Postage. So here, why? Because money is given. Credit or goes. Telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or it is given one. So money will go out from the bank. So here is telephone. So heating and lighting bill paid from the bank account by standing order. So heating and lighting, heating and lighting, heating and lighting. Paid wages by check. So what is happening? Wages. Wages account by bank. Why? Because money is going out from bank. Rent received directly into the bank account. So what is happening? Your money is being received. So bank account will be debited because money is being received. Bank account will be debited. Rent received. So you specify because rent can be paid. See here, rent is paid. So it is rent is received. So or you can write rent expense account or rental income account. So rent received also you can write or rent paid account also you can write. But we have to specify because rent paid is separate and rent received is different. So this is an expense. Rent paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept, which is that we have to disclose everything in detail. So pay bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received becomes interest received. Again, interest can be received also and paid also. So that is why we have to receive specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening. Drawings. The money is going out from bank, right? But out of bank account. So bank. Loan received from a friend B. So what is happening? You are receiving loan from a friend. So all the transactions are assumed to bank. So you write money is being received in bank account. So but who is giving it? It is B who is giving. So credit the giver, credit the amount that gives. So it is the D who is giving. So D account. Bank account. So money is coming in bank and D is the person. D is the account that is giving. Loan repayment made on loan from lead. So what is happening? Lead. Money is going out from bank. And who is receiving? Lead. Lead is receiving or giving. So Lead is receiving. When Lead pay the loan, Lead will receive. So Lead account will be debited. Because debit the account against it. Okay. So be specific, be clear which account will be debited, which account will be credited. You have to be very clear. So then purchases paid by debit card. So whether it is debit card or check or whatever, always it is money will go out from bank. So purchases account debit to bank. Bank account because money will go out when you pay out from bank. I mean, debit card obviously money will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank debting. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a revenue. So create all incomes and gains revenue. Return goods to supplier and grant the refund. So you are returning the goods to supplier. So supplier is receiving. So you will debit and money will go out from bank because money is given out to bank. So refunded money to customer by check. Oh, sorry. So see, return goods to supplier and bank the refund. Giving goods to supplier is what is happening. You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit to yes, but return goods to supplier and grant the refund. Grant the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited. Bank account will be debited. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase return. It is called purchase return. Correct? No, it is purchase return, not supplier. Yes, it is not. It is not recovered. It's purchase return. Purchase return. So refund money to customer by check for goods return. So it is this is sales. So when we have sold the goods, but we have received that. So it is exactly reverse of sales. Sales return. Sales return. And we will credit bank because money will go out. So carriage inward payment, whether it is carriage inward or carriage inward, money always will go from bank account. So carriage inward. We have to specify whether it is carriage inward or not. Carriage inward. So carriage outward. Carriage outward is also whether it is carriage inward or outward, it is always money. So money will always go from bank. So here it will be refunded goods to supplier and bank the refund. So we have received the money, bank will be debited and purchase returns will be credited. Purchase returns are opposite of purchases are on the debit side. Purchase returns are on the credit. Okay. So this is how it is. So this is activity 1.2. So we'll continue in the next class. Students, welcome. So today we'll discuss will receive. When you purchase, you will not receive. When you rent receivable, obviously you will receive. So sales returns you don't receive. Wages you don't receive. Everything you receive. Okay. Amir bought goods for resale and paid for the additional labor, which entries in our books is recorded. Delivery cost. Amir bought goods for resale and paid for the additional labor, which entries in our books is recorded delivery cost. So money will go, definitely money will go. It will not come under the labor cost. Money will not come. So then, when you are selling, Amir bought goods bought by you, you pay carriage interest. So trader takes money from the business customer in bank account for loan, which entries record. So money from business bank account for loan. So from customers funds. So money will go. So it will not be we receive. When we receive, you will receive. You will receive returns. So obviously you will receive. This cannot be done. Some drawings will be done. So these are practice questions from David Hopkins. If you can do this, just have a look at it. Next one. So below are the financial transactions of business opened in businesses. Ledger accounts and further for the financial transactions or transactions between them. Where are the main business related to the accounting environment? Where are the financial transactions? Purchase machinery, where bought goods. So paid carriage expense, paid for additional labor. Bought equipment. So what you can do is you can try working out this question on your own. And suppose you have Excel or maybe there are another tools, so you can try it and put in the description in the comment section you can try. So you can add this and work out. So you will work out on your own. So till then I will Dear friends, welcome to Shasha's website class. So today we'll discuss TT 2.1. So this is David Hopkins' latest book and latest textbook. So we'll start. So below are the financial transactions from bank's business, personal transactions to ledger accounts. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash, cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So it would have on one part, the other part would have been easy, but here it looks somewhat it is somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So basically we need to know the personal account. The personal accounting. So whether this account is receiving or paying. So we need to know this. So purchase goods from Tina, then cost 2000. So when we purchase goods from Tina, Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working out this question on your own. So then you can compare with the answer here. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account. Return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Omar. Omar account. Because sales account is already there. Omar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali sold. Ali, all sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8, 11. Basically we need to prepare 8 legend. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency. Date and the currency. Always. Okay, write always that thing. So which account you are preparing? So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much? What is the worth of goods you have purchased? And it is on October 1st, 2000. October 1st. So purchases. So purchases account debited with 2000. This is what it means. So a lot of students, what they get confused. So they write something here, no? So the thing that is no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit. This side is always credit. Always debit. this currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused. Like so Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you return 2000, here also you return 2000. See debit 2000, credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts. Like one should be debited, the account will be credited. So this is very important. So next, coming to the next. Sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd, pay date. October 2nd. This is what is paid. This is another payment. How much? 300. See, sales is a revenue. Sales is always created. Wait on incomes and gains. Sale is always created. Sale account is created by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So for sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in rules. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing we should understand. So very important. Yeah, very important. So a lot of students they get confused with personal accounts. Rest of the account they do easily. So nominal accounts expenses they write off as an expense. Income account they write off. Revenue account they also write. Assets account debit what comes in credit what goes out that also they write. But in personal account they miss. They get confused. They think from the point of view of max business, but they try to think what Max is doing, whether Max is giving, Max is receiving, or something like that. No, actually, you have to see what Tina, what position is in Tina. So Tina gives, Ali receives. So this is very, very important. Okay, now what has been clear to you. So now it is everything is easy. So then the entry is complete. Next. So sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost to unit. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited to demounted. Tina account will be debited. Tina account will be debited with demounted. On what date? Tina account will be debited with demounted with Tina account is debited with 200. So, but why are we debiting Tina? Because we have returned goods to her. So, purchase returns. Purchase returns. So, purchase returns. We have to open one account called purchase returns. This is what is debit. This is what is credit. This in dollars. This in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of them. It is always a credit. So what is the amount? 200, right? 200. We have to credit. This is how we are. There are so many ways of remembering things. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns 200 with the debit to Tina 200. This is how you have to read and you have to understand. You have to understand accounts. Very important. So that the logical flow of concepts is very clear. Okay? So very clear. Logical flow of concepts is very clear. Now next. Purchase goods from link that cost 2400. So link is another person. So again, what is the link doing? When you purchase from link, obviously link gives. When you purchase from link gives. So that's why we have to credit link. We have to credit link. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there 2400. What date? Date is very important. 8th. From whom? From link. Yes, so you have to link. So purchase account is debited with link. Purchase account is debited with bill to link. And link account will be credited. With link account, we have to prepare link account. So October. So why are we creating link? Because we purchase from link. Understood? This is how it is. This is how you have to understand the concepts. Very clear. Very clear. Now it should be crystal clear. Now let us move forward. So then, sold goods to owner for 1100. Sold goods to owner. So when we sell, obviously owner will receive. So owner is the receiver. Account owner receives. Owner receives. So owner receives. So owner account will be debited. Debit is the account that receives, right? So owner account will be debited and sales account will be credited. Sales account is already there. So we have to prepare owner account and we have to write in sales account. So owner account and sales account. Owner account. Owner account. So owner account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Owner account is debited. Why? Because we have sold it. Sales. Sales, Homer amount is debited with sales 1100. So now Homer account is debited, sales account is already there. So sales account we have to write now. We have to write it in sales. Homer account, October 8. Homer account 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have to return. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10. Purchase returns Tina 100. Purchase returns Tina. Purchase returns Tina. Tina. Where is Tina? Purchase returns Tina. Why we have debited? Purchase returns. So next, all goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had told him at that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit the giver. He is the giver of the goods. So October 11. Why are we crediting? Because of sales returns. So now sales returns. One more account, sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount will be here and and it is on 11 October 11. And what is the amount? Go to again. Raise it. You are right. Ali 300. Sales returns 300. So there is no more. So we have returned everything. So sales returns amount 300. We have to debit. Sales return amount will be debited with this account 300. So this is how it is. Okay. So next, this is activity 2. So now what you can do, you can try working out activity 2.2. So below all the financial valuation for Pen's business, put the transactions to the ledger amount. All the goods are bought and sold on credit. Bought goods 20 that cost 5,000 less trade discount of 15%. So sold goods only for 1,000. So return goods costing 500 less discount to pay. So purchase from B that cost 4,800 from trade discount before trade discount of 20%. Paid T normally owed. Paid B for goods bought on 15th November. Received full payment from B. So what you can do, you can try working out this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. Dear students, welcome back to Shasha's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Penge or Peng, whatever. So business post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, Pinch account, Pinch account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, Tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to Tinge. So again you are returning the goods. This is returned goods. So you are returning to Tinge. So who is Tinge? So it is he's a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is the 45. So 45. 515 the 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct now? 5, 15 the 45. So 55. 55. Okay. So purchase goods from B. So again purchases. Purchase account is already there. So B. So cost 4,800 less trade discount of 20%. So this should be recorded at 4,800 minus 20%. So 4,800 minus 20% is so 48. $3,840. So 3,840. 840. So you have to record it at 3,840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to Ting. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from Lay. So that will also be recorded in bank account. So how many accounts should we open? One, two, three, 4, 5, 6, 7. We have to open 7 accounts. So first, you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 4,250. Because purchases is an expense. So expense account is always debited 4,250. So date always you write the dollars. Amount you have to always write. Don't forget to write the dollars. And what is the date? November 1. And it is sold to, it is bought from Tinge. So November 1. So see purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. So, so Tinge account will be created. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next. The entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be credited with purchases. So next. Sold goods to me for 1,000. Sold goods to sales and the sales account. Sales account and the account. So how much is sales sold goods to me for 1,000? And November 5th. November 5th. November 5th. 1,000.
sales because sales is an income. So credit on incomes and gains. So fifth, so leave because leave is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1000. Why are we debiting the leave? Because we have sold him sales. So we have sold him. So debit credit. Sales account will be credited because it's an income. Leave account will be debited because he is the receiver of the goods. Okay. Then comes next. Next. Return goods costing 500 less discount to 10. So we are returning the goods worth 500, but after discount it is 455. So return the goods means these are purchase returns. Tinge account is already there. Purchase return, tinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit. Purchase returns is because of purchases. So it's a credit. So 455. So what did we when we have returned? We have returned all
लाइव में है आओ यहाँ देखो थोड़ा सा उनके फोन में से लाइव तो देखो मेरा बड़ा संदर पूरा एरिया में कर रहा है
we have returned
वो गाड़ी के शहर में जाके उसने वाइट पे कार्ड करता है मैं खड़ा हो सकता हूँ वो काम के भी जाता है
So what we have to do? We have to debit tinge. Now we have credited purchase returns. Now we have to debit tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit tinge. 400. Always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V. And it is on 15th. 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 November 15th. Purchases account will be debited. 3840. 3840. So purchase account will be debited 3840. We have purchased from where? Okay. So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open if it is not there. We have to open V account. So when we purchase it, we would have given us the goods. So November 15th. November 15th. So 3840. So why we are crediting V? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3840. So now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid V for goods bought on 15th November. So we have bought only once. So we have to pay tinge. We have to pay V and we have to receive from Lee. So received 20th we have paid to Tinge and B. 20th we have to pay to Tinge and B. So bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to Tinge and Lee. Tinge. How much we have to pay to Tinge? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to Tinge. So we have paid 3795 to Tinge. Complete the entry. Complete the entry. How we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to Tinge. We have paid 3,795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3,840. So obviously we have to pay him 3,840, and it is on November 20th. November 20th we have to pay him. So 3,840 we have to pay. So what account will be debited? Bank account will be debited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away. 3,840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1,000 from Lee. So we have received, what date we have received? We have received on November 25th. November 25th. We have received 1,000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from D, right? D, 1,000 from D. We have received. Over. That's all. So we have finished. What else is required? Below are the financial transactions for pen business, post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself, then you can compare checking with the answer here, so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So Tinge account we have paid everything, so there is no amount left over. Sales account is credited. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity 2.2 is done. So here Dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be credited. Sale account will be credited, Dia account will be debited. Why? Because sale is an income, credit or income sign means, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods, Dia account will be debited. Buy machinery for use by business on credit from John's Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, the purchases are always purchases. So you can write purchases. And we have taken Allen is the giver of the goods, and that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recording. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So these are all purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns we have received money, we have deposited in bank. So refund money to customer by check for goods return. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So we will receive joint limited goods. Receive full payment from DIA less cash discount. So we have received payment from DIA. Receive full payment from DIA. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of money. So pay Allen for goods bought less cash discount. So here we have to pay Allen. Allen is the receiver of money, so Allen account will be debited. So we are paying. So money will go from bank, and discount received is again discount received. So
So the amount we are not going to pay because of discount, so that is gain. So discount receivable is gain. So these are the entries. So what you can do normally. So this is activity 2.3 David Hopkins the latest book. Okay. Dear friends, welcome back to Shasha's virtual classroom. This is practical practice questions from David Hopkins lesson number 2, credit transactions. So which are the following transactions? So before attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with our solutions with the discussion. So always get back to me in case you have any doubts by way of coming to the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money doesn't go or come in. Payment to a customer. So when we pay, obviously money is paid. This money is credited. So bank account is credited because payment by a customer. Sorry, see this is payment by a customer. Payment by a customer means we will receive, we will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 50. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So it's a purchase. It is a purchase for Joe's, and it is Joe's books means it is purchase. But in Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at gross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170. Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1,000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded. This will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold. Sales entry will be recorded. Sales entry will be recorded. Okay. So will be recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry. Not this, not this, not this, not this. These are exam still questions, and this type of questions will come in AS lab. Okay, so be careful. So
So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books are books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 with discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is 400. So then purchase goods from Prem 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you have sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 4,800. It will be recorded at 4,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Prem. So payment has been made. To enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase journal. So record all purchases, individual purchases, and purchase returns journal. Purchase returns journal. The record all purchase returns and cash book. Cash book. So record cash payments, cash payments and discount. So cash book for payments and discount, cash discount. So 3 books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of prime entry, 3 books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase return journal, purchase returns account. So then Cora account, Brave account, discount received account. So these are the ledger accounts we need to prepare. 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future problems, I mean future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. Should be very clear. Okay. So now we will start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase return journal. Okay. So let us first prepare purchase journal. So what all will come? Date will come. Name of the supplier, because we purchase from supplier. Name of the supplier. Invoice number. Amount. Okay. So first, what is the date? So we have purchased on 1st November. Number 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So it should be recorded at 8,000. See, remember always, trade discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from Prem. Again, purchase goods from Prem. Again, goods from Prem. That is on 2nd November. So 2nd November from Prem. So the amount is 14,000. Amount is 14,000. Next, again you have purchased goods from Cora for 16,000. So the trade discount of 20%. Again from Cora. What date? It is on 5th November. We have purchased on 5th November from Cora.
So 8 plus 14, 22, 22, 34, 800. So these are the total purchases. This is purchase journal. Now we need to record, okay, purchase returns journal. Purchase returns journal. So what is the date again here? We'll write the date. We'll write name of the supplier. So what date? Return goods on 4th November. So number 4. So what is the amount? 320. So from we have written 4 up. And we have received credit note. See, remember one thing. So when we are writing the purchase journal, we are recording individual. Okay, so we are recording individual entries. Very important. Okay, so this way you will remember this again when you will remember when you are preparing control accounts, when you are reconciling control accounts. At this time, at that time you may need this knowledge. So at that time you may need this knowledge because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book what all will come? Discount column will come. Since we'll be paying, so this side is always credit, this side is always debit. So this is discount column. This is discount. This is cash. Cash column. So it is in dollars. This is also in dollars. So here, next first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Cora and Phil. So we have paid to Cora and Phil. So we have paid to Cora. Cora. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora? Cora you have purchased, you have you have returned? You have returned 320. What is the 320? So this gives 2000 plus 4800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. So discount 400. But you already pay, you have returned goods for P20. So what is the discount you will receive here in this case? In this case, the discount is so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 4,800, and there is a return of 320. So purchase, return. So net purchase is 20,480 and discount is 5%. So be careful. You have to see sometimes the rate of trade cash discount will be different. So in this case, here also it's 5% cash discount. Here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to claim, how much you have to pay? Claim, so the entire amount you have to pay. So claim is 14,000. Discount is 280. Discount is 280. 14,000. Claim 14,000. Minus 13,720. So you have to pay 13,720. So this is the amount you have paid to trade. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November 9th. So you have made the payment on November 9th. So this is the cash book. This is how you have to receive record. So discount column 1024, frame 280. So cash. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts you need to prepare? Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November. So what is the date? What is the amount of purchases? Total purchases. You have already done purchases, right? So what is the total
statistics is very important. So when you are doing control accounts at this time, you will come to know. So you have to reconcile. So it's very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but we will enter it in purchases account. We record the total amount. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So now note 10. Purchase returns journal. So what is it? So now we have to prepare other accounts like Cora account. So we have purchased from Cora, so Cora that will be credited. So always write that in account. Preparation of the account. Cora accounts. Cora account will be credited. Take when we have purchased. So we can see few columns of Cora we have purchased from the stamp. Stamp 50. So first give 10,000. 50 days. So this is purchases. Purchase. This is purchase. Remember, you are writing purchase here, not purchase journal. Okay. Purchase. Purchase. 8,000. Purchase. 4,800. So here this side. So it will be. So this is number one. Because purchase journal, it is a journal. Okay. So purchase journal. So this is Cora ledger account. So now next, what is it? So what did you return? You return on 4 November. So how much? 320. Yes, 320. So next, frame account. How much is frame account? So frame account is 14,000. So frame account is 14,000. So this is on one date. This is on second date. Purchases. Okay. So now come to discount receipt. So again, discount receipt is again. So discount receipt is again. So it will be credited. So individually you have to write. Or you can write the total. So discount receipt is 1304. 13,004. So we have to record that discount receipt 13,004.
So that's also discount received. So what else is there? So so I told six ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and book ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we have already prepared. So that's all. So that's the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important, prerequisite for you to score good marks. So welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of in lease cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at my looking at this particular session, you can just try working out the problem on your own so that your understanding is clear. So always try to work out on your own and then compare the answers so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particularly, you have to write this in a particular format or particular what do you say in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between. So there should be one line. So again, similarly, this side also there is one column, another column, date, one column. So this is date, one column, date. So details, particulars, then discount receipt, one column, cash, one column, bank, one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit. This side is credit. So the date, whatever your particulars. So first you write this till here. So copy. You have to write as it is. This way you have to write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in lease cash book. April 1st, cash sales 1000. April 1st. April 1st. Okay. So one more thing. So whatever we receive, we have to write here. So all that is received, we have to write here. And whatever we pay, we have to write here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account. So this is discount allowed. So this is discount allowed discount. So this is discount received. Sorry, this is received. So it's a credit. No, it is received. So this is discount allowed. Allowed discount. So allowed discount. So remember this is allowed. Okay. So this side because when we pay, we pay, at the time we receive discount, no? We receive, so it's a credit. So, but when we receive, at that time we allow discount, so it's a loss. So we write here. So cash account sales 1000. Sales account 1000. So we write here. So we receive cash upon sale, we write here. So all whatever we receive, we have to write here. Whatever we pay, you have to write here. This is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing in this way. No, see, they are not writing whether it is received or paid. So here they are also. Discount received, they are written. Okay. So discount allowed. So here they are not written whether it is received. So this is just for you to remember. So just for you so that you understand, it is easy for you. Okay. So don't write this. So don't write. This is for you, just you, for you to remember. So don't write. Okay. So don't write. So receive cash. When we sell, we receive. So then what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is a, so cash account credit what goes out. So what date? So it is on second, April 2nd. So second. So credit what goes out. Electricity. How much? 100. Cash. Credit what goes out. Cash has gone out. Credit what goes out. So next. So we received, we have paid 100. So credit cash account will be credited and electricity charges will be debited. So next, cash sales 800. So we are receiving cash again. So what date it is? It is on 3rd. 800 on 3rd. Sales 800. We are receiving. When we sell, we receive. No, so receive. So 800. Next, banked cash. So what do you mean by banked cash? We are taking out cash and putting into bank. So what is the entry when we bank cash? So very important. Okay, so this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay, so this is the easy way. Bank cash. Bank the cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So bank the cash means we are depositing cash into bank. Cash is going out, cash is going out, and money is coming in bank. Bank the cash. So money is coming in bank. Bank. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Bank the cash. So but cash is going out. Cash will go out. So cash will go out. What date? 4. 4. Bank to cash. So remember, always you have to write like this. Okay. So my bank to cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Bank to cash, and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here, contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go where nowhere but only affected in the cash book and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column, here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful, okay? So a lot of students they commit mistake, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in bank. Simple, that's all. Okay. So then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on 5th. 5th. Stationery. How much? 20 bucks. So 20. So we drew 900 from bank for cash float. So we are taking out money from bank. Okay, we drew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So we drew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank, and coming in cash. Cash, cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited, cash account will be debited, and bank account will be credited. So understand, this is very important. Lot of students commit mistake here also, so they get confused. Understand this. This is very very important. Withdrew 900 from bank for cash float. Cash float means to keep in office. To keep in office for cash expenses. So that is the meaning. Okay, to keep in office for cash expenses. So we have to record rupees withdrew 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What date? 6th. On 6th, what is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money has gone out from bank. Since this payment rate, so money has gone out from bank. So against this, here you have write cash, and this is called contra again. So again this is where you have, here you have written in cash column. So here you have to write bank. So this is in cash column, cash column. But again this you have to write bank. So be careful. So again this you have to write again contra. Why? Because it is hitting cash on one account and bank on the on another account. Same, same. So very careful. Okay. So a lot of students commit mistake here. So this is very important. This is very very important. This is very important. Contra entries are very important because students, lot of students commit mistake here. And cash book problem is very important in the AS level. So because it's very important, often asked. Okay. So very very important. So at least in tests, internal tests and all, it is often asked. So
lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay, so the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So we are total here. So we total here. So whatever balance is there, balance, write down. So this side here cash. So balance get down. So what is the balance? So here this side 1400. Here it is 900. So 1400 minus 900 is 500. So we write here 500. So here 1800. 1800 plus 900. So 19 plus 8, 27. 27 minus 27 minus 1500. 2700 minus 1500. So this will be 1800. So it will be 1180. Here it will be 1180. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. Crystal clear. Okay. So this is how it is. If you add all this should be 7700. So in other words, when you are balancing, so both the sides should be same. Okay. So here balance got down. So balance got down. Whatever is carried down here will be brought down here. So 1180. So this will be 500. So this is how it is. So end. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So I will be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul, which cost 14,000. This is very simple journal entry. So what is there in this? So first one, so we'll just write here. So first one, first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay. So very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to
any of the subsidiary books or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise, as a merchandise means for sale, then this would have gone to purchase book. It would have gone to purchase registry or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal. So what are the various journals? Purchase journal, sales journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to Paul account. So we will debit motor vehicle and credit Paul. Why? Because debit, what comes in debit, asset is coming in, asset is coming in. So Paul is the giver. So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they have not mentioned about narratives. So you can, if you want, you can write the narrative. So you can write the narrative. Purchase of motor vehicle for use in the business. Okay. Next. Purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. Office furniture for the business costing had been debited to purchases account. So office furniture are normally purchased to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account in error. Instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, you to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So what? How to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this. We have to credit and to bring this we have to debit. So what is the entry? Furniture account debit. Debit furniture. Debit furniture account. Credit purchase account. So what happens when we credit purchase? The purchase which has been debited will cancel out. So it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next.
new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery. Equipment, furniture, stationery. Debit. Equipment. Furniture. Debit. Stationery. How much? So this is 6,000, 3,000, 1,000. 6,000, 3,000, 1,000. So we have to credit what? Credit capital. Credit capital 10,000. So because owner is the giver of all these things, so we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment, 10,000. So that is why this will be credited. Next. Credit note number 34 for 170 received from B Jones, a supplier, has been posted to C Jones account in error. So what is the right entry? Received from B Jones. So we have received credit note. So we have to debit B Jones. A supplier. So we have to debit B Jones. So what is the right entry? We have to debit B Jones. So to understand this again, we have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry? So what is the wrong entry? Wrong entry is received from B Jones. Okay. Received from B Jones. So we have to credit B Jones. Credit note. We have to credit B Jones or debit B Jones. We have received, no. So we have received means we have to debit B Jones. We have to debit B Jones. Debit B Jones. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit means you have to debit B Jones. Understood? You are getting credit. So you have to give, you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B Jones, you have debited C Jones. You have debited C Jones. So how do you rectify this? Obviously you have to cancel this and you have to bring in this. So what you have to do? You have to debit B Jones. So the entry has come in. So to cancel this out, you have to credit. So credit C Jones. So when you pass this entry will be offset. We already debited C Jones as wrong entry. So when we credit C Jones, this entry will offset. And to give credit, you have to debit. So we have to debit from B Jones. So this is actually transfer entry, we can say. Okay. Transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. This one. This is also transfer entry. This is also transfer entry.
transferring from furniture purchases to furniture. Okay. So this is first one is error of principle. Second one is also error of principle. So this one is opening journal entry, and this is again error of principle. Instead of debiting one person, we have debited some other person. So this is activity 3.4. This is the end. So it's very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. So don't adopt for shortcut. Please practice, understand, remember, apply, do lot of hard work. So never try to resort for any shortcuts. Never do that. So dear friends, welcome back. So this is practice questions from books of Primentary. So the books of Primentary, okay. So books of Primentary practice questions. So this is David Hopkins' latest book. So then we can just discuss this. So practice questions. So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross-check with this, and we can compare. You can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know. We can discuss it. So and we can try to sort it out. Okay. So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at the net of. So 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment, not within the time of sales. So what amount should be entered in a sales journal? So our sales journal will not be recording this. We will be recording net of trade discount. 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay. Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record this transaction at 1800. So what will be debited? Sai received an invoice. Means Sai received an invoice means Sai has purchased. So Sai has purchased. Okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See, purchase journal. So what effect will it have on Sai's accounts? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account. Purchase account debit. Purchase account debit to Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit Jaya. Why? Because purchases is an expense. So Jaya is creditor. So supplier. So should be credited. So we have not done this. So it is under added. So this is the so simple it is. So if you understood the concept, it's very simple. Otherwise, it's complicated. So don't try to mess up. Take some time to understand the question. So then the concept is very clear. Then let us have a look. What is this? Deepak's transactions were made as follows: bought goods, sold goods, bought goods, purchased, return goods, purchased. So basically, this is a books of question on books of Primentary. So you have to write various books of Primentary like purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try the working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely
discuss this question once you let me know. Okay. So till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. So this is the practice questions from balancing the accounts. Balancing accounts. So we will discuss this. So before this, you can just try answering yourself and you can cross check the answer. Which of the following is account is most likely to have a credit balance? So capital account will have credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. Office equipment is an asset, so it is a debit balance. This rent is also an expense. So again, the question is whether the rent is payable or receivable. Since there it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, if it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance the following account at the end of September. So this is a nominal account, discount allowed. So discount allowed. So balance. So we have to add it 234. So that is balance. See, balance is 234. So it will be carried out, but it will be carried forward straight away. It can be straight away carried forward to trial balance. So here we just put the total and carry forward to trial balance. Discount received. Discount received account. So 100 plus 130, 130. So balance carried on. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. So this side there is total of 1340, and this side there is total of 740. So what we have to do? So 1340. So this side, to make it 1340, so it is 740. So 700. So if you put 700 here, so there will be balance character. Balance character. So 700. So the both the sides, the always probability to match. So 1340. So if we write 700 here, so this will match. So it will become 700. So it will be very important. Next, A and B limited. A and B limited account sales. So total sales. So we have told to A and B limited, and we have not received any money from them. So just
700 plus 450 is 1150. So 1150. So it will be balance. So 1150 will be the balance. Carry on. So both the sides it should be 1150, 1150. So then this one, George account. So what is George account? So George account, we have sold for 2300 and we have received. So he has paid. So everything is clear. So 2300 is set, 2300 is set. So there is no question of balance account. Motor vehicle. So balance carried on same amount. So then both the sets are same. Cash account. So normally it will have debit balance. Debit balance means debit side will be everything. So 800 plus 100 is 900. So 900. This side it is 200, 20, 45, 265. So 900 minus 265. 630. So balance carried on is 679. So the total, if you put balance, will be so to actually practically do the problem out, as you can see, cash book problem. So the previous question 4.1, activity 4.1, there I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is heavy. Since credit balance is heavy, see 5,300 and this side it is 3,500. So since it is credit balance is heavy, so it will be here this side balance. Balance carried on will be this side. So 5,300 minus 3,000 back. So 1,800. So balance carried on will be 1,800. So this side total it is 5,300. So this side also it becomes 5,300. So explain why trade receivables account have debit balances, why trade payables have credit balances. So trade receivables is normally an asset, so from which accounts are receivable. So they are always show debit balances because they have received, they owe us money, so owe business money. So whereas trade payable are liabilities. Dear friends, welcome back to Shelter's Virtual Class. Today we will discuss activity 5.1. So before having a look at this solution, you can try working out the solution on your own and you can cross-check with the solution here so that you are confident whether you understood the concept of it. Complete the table taking the boxes that discussed the given the concepts of the business. The first one is completed for you. Data vehicles is an asset. So what is before this? Let us discuss what is you as negative or revenue or expense. So asset is something we have. So it is a resource controlled by an enterprise from which future benefits are expected to. Something you own and you something that is owed to you is an asset. Okay. So what is liability? Liability is something you owe some other person. So you have to pay to some other person. So that is known as liability. Revenue or the income is that part of those items which you keep getting and which you can use for your business running a business operation. So it is income for you. So you can it is generated regularly or it is the main source of your operations. So expense is the expenses which you incur like salary, rent, all those things. Okay. So rent is normally so rent is let's assume it's an expense because since they are not specified. So if you see other line item here rent receivable is there, so this is income. So let us assume on presume means so this is the rent paid or payable. So this is an expense. Since nothing is specified, you see the amount here. So if this was not specified, you would have written it as expense also and income also. So it is doesn't make any difference. But normally it is written as expense. So when nothing is specified, when it says rent, it is expense. Okay. So loan is a liability, something which you have to pay back. So loan you have taken from someone, you have to pay back. So interest received is something which you get on your deposits. So you have kept some money in bank. So you have earned interest on that, so that you can use it for your purpose. It is interest received. Interest paid is an expense, so it is an expense. So we have it here. So trade receivable is an asset. Why? Because we have sold on credit and that person has to pay. So these are customers. So trade receivables is also known as debtors, trade debtors, receivables, mixed receivables, all together is known as trade receivables. Trade receivables is something which is owed to you. So which is owed to you. Okay, so it is an asset. So inventory is also an asset because it is something you have held in your hand. So it has got value, you can sell and you can get money. So it is an asset again. So discount alone is an expense because it's a loss. So once you allow a discount, you not able you have to your money will be not be getting anything. So that is allowed. It is an expense. Postage is also an expense because postage is the money spent on sending postage to courier or all those things and all. So then next postage is bank account is an asset. So normally bank means it is bank balance. So normally bank means it is bank balance. So it is an asset. So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income which you keep getting. Trade payables. Trade payable is a liability because it has to be paid. So trade payables are liabilities. So they include credit write-offs. They include bills payable. So all those money which are owed by you. So you are not on credit, you have to pay them back. So that is liability. Computers is an asset because it is something you have which you can use in business, which you are using in business. Wages is an expense. Discount received is a revenue or other income. So interest received is normally other income. So discount allowed in discount received is also other income because when interest received is not main revenue from operations. Whatever is not from main revenue of operations, it's considered as other. Okay. So rent receivable also can be considered as other. So all these are the revenue. So what are revenue? Main revenue. So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is all revenue. So you have to be very careful with the revenue or other income. So that is the end of this is the exercise 5.1. Activity 5.1. I hope you have understood the concepts. So we can proceed further. So welcome back, dear friends. Let us discuss activity 5.2. So and we can okay. So activity 5.2. In which ledger would you exclude the following amounts? The first one is completed to you. So in which ledger? Okay. So which ledger? So what are the different ledgers? So there is general ledger. So there is customers ledger. There is suppliers ledger. So okay. So those are the various ledgers. So let us have a look at the various ledgers that are possible. So see, these are the list sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature alone or recorded there, and cash book for the bank and cash flows. We use cash. So sales ledger to record sales, purchase ledger to record purchases, general, other items other than cash in bank. So private ledger, so other than which is not recorded normally, which is a confidential ledger, and cash book. Cash book is for the bank and cash accounts. That is whatever is received, whatever is paid, all those are bank accounts. Okay. So capital is general ledger again. So customer who buys goods on credit, customer who buys goods on credit. So it is we are selling and who is you are buying. So customer who buys goods on credit. So when you are selling, the other person is buying. So these are credit sales ledger. Supplier of office equipment. So whatever it is, whether he is a supplier of goods or supplier of office equipment, whatever it is purchase ledger. So since it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful. We have to ask ourselves whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, it is not a merchandise. It is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger. So it will not be recorded in purchases ledger because it is not purchase of merchandise. So bank account will be recorded in bank ledger itself. Bank or cash book you can say. Okay, so bank or cash book. So wages is in general ledger because it is an expense. Sales will be recorded in nominal ledger. So yes. Okay, once again, sales ledger for the accounts of customers that buy on credit. Only credit customers. These are receivables. So these are customers that buy for the accounts of customers. Okay, it is not for sale. Sales, even though it mentions sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit because customers and credit are related. So purchase ledger. So even though it is purchase ledger, it is for the accounts of suppliers. It is not for the account of purchases. It is for suppliers. So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded in other income. So other income is like interest, all those things and all expenses. Expenses again purchases. Okay, so all these things are recorded here. Private, so there are going to be cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often asked in MCQs and all. So keep a note of this. So very important. Okay, so sales is general ledger. Okay, so general or nominal. It's called nominal. So general or nominal. Why? Because it is revenue. Wages is an expense. Okay, so be careful. So this is how we have to understand the concepts and so the concepts of see as you proceed for A levels. If the concepts are not very clear, you will get hiccups. So you will struggle. So you will struggle in A levels will set you very good marks. So there is no shortcut. Please remember there is no shortcut for success. You have to put in lot of efforts. very important. Understanding the concept is very, very important. So, this is the end of activity 5.2. So, now let us continue with activity 5.3. So, activity 5.3. So, activity 5.3, complete the following sentences when inserting the correct word from the following list. So, simple it is. So, dash ledger contains the accounts of suppliers from whom the business based on credit. So, dash ledger contains the accounts of suppliers. Suppliers. Purchase ledger. Purchase ledger. No? Purchase ledger. Purchase is related to suppliers. Suppliers means those who supply material to you. Suppliers means those who supply material or goods or merchandise. Those who supply, okay, those who give on credit, okay, so on credit. So very important. So don't get confused with suppliers. Suppliers means whom you purchase, from whom you purchase, from whom you purchase. Purchase on credit. From whom you purchase on credit. Okay. So the heating and lighting account is stored in the dash ledger and is an example of dash. So heating and account is stored in the general ledger. General ledger or nominal ledger and is an example of nominal account. Expense account. Okay. So expense account is so expensive. So the goods bought on credit are recorded in the goods bought on credit. Goods bought on credit are recorded in the again where you record is non-current expense purchase general sales. So we have to choose from this, right? So purchase ledger contains the accounts of suppliers from whom the purchase correct. So the heating and lighting account is stored in general ledger. Example of expense account. This was correct. This is over. This is over. Then again here, what else is there? Sales. Is there anything related to sales? Good bought on credit or recorded in the no, it's not in sales, not in sales. Not correct, no, not correct. So only three types of ledger around there. So only three ledgers. Okay, so when they say ledger, ledger. Okay. So then goods bought on credit or recorded in the so then a dash is a setting what use in the business for a long period. So not so we have chosen this, we have chosen this. Nothing is related to sales. You just see the dash ledger contains accounts of suppliers from the business based on credit. So purchase ledger. The heating and lighting account is stored in the general ledger and is an example of expense account. So goods bought on credit are recorded in the general ledger. Okay. So then dash in non-current. So this is again purchase ledger order. So general ledger. So a non-current asset is So very simple thing. So if I get confused, see again the concept should be very clear. Okay. So dear friends, welcome back to Concise virtual class. So classification and division of nature. So let us have a look at the practice questions today. So which amount is most likely to be kept in private ledger? So drawing is interest received, drawing is what is very private. So obviously drawings is very private. So how should cash discount be classified? So how should cash discount be classified? Discount allowed is an asset. No, it is not an asset. It is an expense. So it is income. No, it is liability. Discount received. Discount received is a liability. No, discount received is an income. Yes. Expense. No, answer no. So B. Explain why it can be useful to group accounts into different categories for the purpose of classification and presentation, and the account becomes easier. So discuss why a business may use more than one ledger. So again for specialization, so we can have a group of people maintaining the specialized in particular group, and it will become easier also to verify and cross check and to keep mathematical accuracy. So this is the end of practical questions. So let us continue with the next. Dear friends, welcome back to Shasha's virtual class. So today we will be discussing activity 6.1. So prepare a trial balance from the following balances that have been instructed in the books of small online retailer at 31st December. So they are given assets, liabilities, expenses, all these things. So based on this, we have to prepare trial balance. So before having a look at this session, I request you to try this drama on your own. So basically, it's very easy and very simple topic. So I think you will be able to do it. So you can then cross check with the solution. So prepare a trial balance from the following balances. Okay. So how will we do it? Following balance. Extract it. Small, all net, retailer, add on, 31st December. Small 100 retailer and 31st December. Add on, alert, 31st December. So write it in a specific format. So basically, we will have elaborate particulars or names of accounts. So here in the ledger folio, so debit, credit. So they will have two columns, debit column, credit column. So let us start. So before starting, so property. Property, what is property? Property is an asset. Asset always show debit balance. Property always show debit balance. Motor vehicles. Motor vehicles is an asset. Always it shows debit balance. So office furniture. So remember one thing. What is that? So when you are learning trial balance at that time, you have to remember assets, expenses have debit balances. Normally have debit balances. Assets and expenses normally have debit balances. Similarly, liabilities and income or revenue have credit balances. By default, okay, by default, they are always assets and expenses. Assets and expenses are always debit balances. Liabilities and incomes are always credit balance by default. Okay. So office furniture is an asset debit balance. So computer is an asset debit balance. Sales is a revenue income credit balance. Sales written exactly reverse of sales, it is debit balance. Purchases is an expense debit balance. Purchase returns is exactly reverse of purchase returns, it is credit balance. Motor vehicle expense is debit balance because it is an expense. Advertising is an expense debit balance. Office expenses is an expense debit balance. Stationery is an expense debit balance. Cash is an asset debit balance. Bank credit. So it means it's a liability. So credit balance. So capital always a credit balance because it's a liability to the business. So drawings always debit balance because it is exactly reverse of capital. So now we can prepare the trial balance. So write down all the names of the amounts: property, motor vehicle, office furniture. Property, motor vehicle, office furniture. Property 100,000. For motor vehicle 18,000. Office furniture 14,000. Office furniture 14,000. Computer 2,000. Sales 40,000. Computer 2,000. Sales 40,000. Sales return 600. Purchases 6,000. Returns 500. Purchases 6,000. Return 500. Motor vehicle expenses 4,000. Advertising 1,600. Advertising 1,600. Office expenses 1,000. Office expenses 1,000. Stationery 400. Stationery 400. Cash 200. Cash 200. Bank 300 credit. Capital 110,000. Capital 110,000. Drawings 3,000. Drawings 3,000. So the total is, if you add both the sides, it is 150,000 against 150,000. Very huge. So this is different. 6 point. So this is different. So it's actually so in this discuss activity 6.2 today, state which of the type of errors each of the following represents. A customer's invoice has been omitted from the sales journey. So we need to mention the type of error. So we need to write the type of error here. So before this, let us have a recap of what type of errors and what are the different types of errors. So basically, there are 6 types of error that can occur when even when debit and credit totals in the trial balance agree. They are also type of error. Error of omission. What is error of omission? A financial transaction omitted completely from the books of omission. Syllabus is there, being neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered, not at all entered. So not entered in the book of private entry. So the entry itself is not recorded. Not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expense you have incurred, you are not recorded. So that is what example is 100 dollar 100 of equipment is bought for cash. The transaction is forgotten and not entered in the equipment or the cash. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are doing something more. So coming, okay, you are doing something extra. So here it is omitted. You are leaving out. Or skipping. So here it is. You are doing some extra. A financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected. You have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for stationery is posted to the advertising account. Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both class-based expenses. So same class. Okay, so this is very important. Same class. So expense or revenue or asset or liability, whatever. So it is the same class, but instead of posting to one account, you have posted to some other account. So that is extra you have put in some other account. Error of principal. What is error of principal? So you can so you don't know the accounts. Suppose someone doesn't know the accounting principles. Doesn't know the accounting principles. Ignore it. Ignore it. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he recording it as an asset or something like that. For example, a financial transaction is posted with the correct amount to the correct side of the wrong class. It is wrong class. For example, they will say payment for fuel for vehicle has been debited to the motor vehicle. So vehicle, fuel for vehicle is a nominal account, debited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure has been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are classed as expenses when the motor vehicles are not correct assets. Okay, so it is wrong class. Ignore it. So what has happened? The person doesn't know where to record. Instead of recording it, fuel for vehicle is recorded as motor vehicle expense. So that is wrong. So ignore it. Means he is not followed the accounting principle. Does not follow the accounting rules. This is same class. Okay, next. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time, so wrong amount is entered in the book of prior entry. So what is book of prior entry? You record it for the first time. So there itself you have written it wrong. So wrong amount is entered in the book of prior entry for a financial transaction. The purchase invoice is entered on the purchase journal as step. So yes, it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prior entry. So first recording, first time recording itself is wrong. So next, complete revision of entries. Complete revision means instead of debiting, they have written, instead of crediting, they have written something. Okay, an amount that should have been debited has been credited, and the amount that should have been credited has been debited. So a payment made to Sam is debited to the bank account and credited to Sam's account. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam. It should be debited to Sam because it is paid. It is So be careful. Okay, so your concept should be, it should be logical flow of concepts. It should be logical flow of concepts. So if you understand, if you understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try to try shortcuts in learning. Never shortcuts. So a payment method scan is debited to the bank account and exactly reverse, complete reverse. It is complete reverse. Okay, it is complete reverse. Instead of debiting, you are crediting. Instead of crediting, you are debiting. So compensating errors. So what happens sometimes? Errors will offset. So and then top. So the compensating errors. So compensating means one will offset the other so that there is no full photo. So compensate. They compensate one another. So two or more accounts will cancel each other out. And invoice of 100 in sales journal is posted to the customer account as 1000, and the same amount, the sales journal is underwritten to below by 200. The debit balance on the customer's account and the credit balance on sales account will both be underwritten by 200. See what has happened? 1000, 1000, instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200, and the other place they have not written. So because of that, they cancel out, and the net effect is nil. So the debit will be equal to credit. So ultimately, so what they try, what it is told here is, they cancel out. Simply they cancel out. Okay, so they cancel out, and the error is not at all evident. Okay, error is not disclosed. Error not disclosed. In trial balance, they offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other. Okay. So this is what you need to know. So first you need to understand this. Then only you should do that problem. So now having understood that, now we will discuss it. Okay, customer's invoice has been omitted from the sales journal. Omitted. Error of omission. Simple. A purchase of goods for 100 has been entered in the purchase journal. So purchase journal, original entry, because first as soon as we purchase, we are recording purchase journal. So original entry, purchase the goods has been entered in the purchase journal. So it is error of original entry. Next, discount received from Mari has been debited to Maya's account. So what has happened? They have received the discount, and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. Because you have given credit, you have given debit to Maya instead of money. So you have debited. So it is correct. You have debited to, instead of one person, you have debited to another person. You have just given more. Whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it will be debited or credited. It should be credited. It should not be debited. Correct? No? So because money will go from bank and credited to the advertising account. So it should be debited to advertising account. So it is complete reverse. Error of complete reverse. Entries were 100 too high over on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense override means expense has increased. So sales account, income also, sales account. So income also has increased. sales is credit. So what will happen in this case? This is overadded, this is also, so debit is also increased, credit is also increased. So it will offset. So it is compensating error. Compensating error. So next, entries 250 were too high, overadded on the heating and lighting. Heating and lighting. So expense. So overadded to the heating and lighting. So expense has increased debit. And 52 underadded. So expense, again it is expense. It has been underadded. So it has underadded and it is credit. That is also debit. So that is also debit. So this is also debit, that is also debit. Instead of instead of adding it to heating and lighting, it has been added to rent payable. Both are expenses. So instead of adding one or another, it has added. So it is compensating because both are compensating. The net effect is nil. Expense will increase, expense will come down. Instead of adding this amount, it has been added to this amount. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it should have been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has now been followed. The person is ignorant about the rule. So rule has now been followed. It is error of principal. That's all. So this is end of activity 6.2. So this is a very important topic. So you have to be very thorough in this concept because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be zero. So they have to do it. Dear friends, let's continue with activity 6.3. See, an inexperienced bookkeeper has extracted the trial balance on 31st December 2021. It does not balance. Retake the trial balance, rewrite the current trial balance, and correct the errors. So basically, we need to rewrite the trial balance. If anything, if there is any mistake, we have to do. So you know, all expenses, all assets, and expenses are debits. All incomes, all liabilities, and revenue or incomes are credits. So the credit balances. Okay, remember? So this is the basic rule for trial balance. Remember this. All expenses and all assets and expenses are debits by default. All liabilities and revenue incomes are credit by default. Okay, by default. Normally by default. Very important rule. So before learn this by heart is whatever. So before starting this question, so try to answer yourself and then you can have it. So plant and machinery is a debit balance, so this is correct. Loan from David. Loan from David is a liability, so it is a liability. It should not come here. It should come here. So office equipment is an asset, so it is debit. Wages is an expense. It is debit. So rent and rates are expenses. cash is normally a debit balance. It is an asset, so it is normally debit balance. It is never a credit balance because cash can never be overdraft. So general expenses debit because they are expenses. Normally they are debit balances. Sales, yes, they are always credit because they are all revenue. Purchases, expenses, correct. Discount allowed. Discount allowed is always a debit balance because it is an expense, it's a loss. So not here. So it should come here. And discount received. Discount received is a revenue, which is again other income. So it should not come here. It should come here. So bank debit balance, normally trade receivables asset always debit balance. Trade payables, yes, credit balance is a liability. Purchase returns. Purchase returns are exactly reverse of purchases. So purchases are debit. So purchase returns are always credits. So sales returns. Sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So rent receivable. Rent receivable is an income. It is revenue. It's a gain. So it is always credit. It's not a debit. Capital is always a liability, always it is correct. And drawings is exactly reverse of capital. Exactly reverse of capital. Drawings will always come here. So now you read out the trial balance, cross check, so it should be perfect and it should be matched. So that's all. So this is a very simple question. So unless you have understood the concepts, if you understood the concept, it's very simple, very simple, very simple. So just do it. And so let's. So this is activity 6.3. Let's continue in the next class. Till then, have a good day. Dear friends, welcome back. So this is practical questions from trial balance, lesson of trial balance. So let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here. An invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error. So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed account. Which effect this has on the trial balance? Discount received 100. Discount received has been posted to the discount allowed. Has been posted to the debit of the discount allowed account instead. So discount received is income. So discount received is income. But so it is credit balance. So what has happened? So it has been debited, has been posted to the debit of discounts allowed. Debit of discounts allowed. Discount allowed. So what effect has this on the trial balance? So too little debit. No, this is wrong. And 100 too much credit. This is wrong. 100 too much debit. Correct. So it can be 100 too much debit. Let us see 100 too much debit and 100 too little credit. Correct. So this can be the effect. No effect on the trial balance. No, this is the right answer. Because a credit has been affected as debit, so it will have too much debit because you have debited discount received is a credit, so you are debited, so it is debited, and you are not credited to discount received, so you are not done this, so it is to less credit, so this is correct. Next, which of the following is not a reason to prepare a trial balance? To check that the total of debit balances equal to total of credit balances, to find to help find errors in the accounts, which is not a reason. Okay, so this is the reason. This is the reason to increase the sales of a business. That's also it's not a reason. Okay, to prepare monthly reports for management. So this is not a reason to increase sales. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from these books. So you can try working out this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So capital is the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is the credit, so it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset debit. So trade payables, liability credit. Loan from team, liability credit. Drawings is a debit. So balancing figure is, so capital, so basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay, so difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay. Have a good day. Till then, bye. Dear friends, welcome back to Shasha's virtual classroom. So today we'll be doing practice exercises from credit transactions. This is from David Hopkins. Uh, Suppose the following transactions in the books of your order. Okay, so if it tells you write down the names of amounts. So if it helps, write down the names. These are tips. Okay, so these are the tips. So write down the names of amounts you should debit or credit before you start posting the transactions to them. Work out the amounts of trade and cash discounts before you post them to their correct amounts. So first, let us calculate the amounts. So trade discount, purchase goods from car which cost $3,000 less trade discount of 10%. So 3,000 minus 10% is $2,700. So then sold goods to live $600 into like rupees. So return goods which had gone to around 200 less discount to call. So 200 less discount. So it was you had sold here, right? So you had sold here. Now, so it is being returned. So 20,000 less, 200 less 10% is purchase goods which cost 200 before trade discount of 10%. So before trade discount of 10% means, so again it will be dollar 2800 minus 10%. Minus 20 plus 2520. So it's 2520. So trade discount is never recorded. So trade discount is never recorded. So it is 2520. Sold goods to change for 1300. So no discount here. Large return goods which had costing $200 less. So this is like we are sold for 600. Lie return goods which costing $200 less discount. We did give lie any discount. So I will having given any discount to lie. No, no. So then it will be as it is. So $250. So there is no discount. Not given. So not be given again. So it again it will never be given. So even though the question says given, but we are not supposed to go. So because here they are not mentioned whether we are given or it will be that there is a mistake. There is a mistake, printing mistake. So if that is the case, then yes, because if you it's 10% discount. So let us consider it's 10% discount will be 540. So here it will be lie intervention cost 200. So minus 10% will be Gerard paid car and linked the amount due to them after deducting 5% cash discount. See, so many big calculations. Lie and cheat paid Gerard the amount they owed him after deducting 5% cash discount. So again you have to calculate. So how do you calculate? So Gerard, okay, so Gerard. So Gerard will pay. So Gerard paid car. So we are paying to car. So remember whose goods? Gerard's. So far okay, far how much we have to pay? Car we have sold 2700 minus we have returned. He has returned 27180. So 2700 minus 180 is equal to 2520. Minus 5% cash discount. So this will be recorded. This is cash discount. We recorded. So this will be how much? 239. This cash discount. Cash discount is 220 plus 186. Now core is over. So now lie. Sold goods to lie 600. fixed value. For and lim. So lim for and lim here. So lim you write lie limit. Then 600. How much has been returned? Close. So 540 minus 100. Is 360 minus 5%. 5% is cash discount again. Cash. So in that is equal to 360 minus 18. 18 is cash discount. So the net amount payable will be 340. Okay, then current lie and chill paid thereof. Lie and chill. Okay, so now lim. So lim, where is lim? Power over, lie over, power over, lim. Is 2800, that is 2522. So are you returning anything? Lim. Is lim returning anything? Are you returning anything? Not returning. So back to minus balance. By by 126 minus 136, which is cash discount. Okay, that is it. Keep it. Chin. Where is chin? Chin is here. Sold goods to chin. So chin has not returned any goods. Okay, chin has not returned any goods. Only lie returned. Only there are purchasing goods. You have returned to Mr. Virod has returned to CA. Returned goods. Okay, so return goods which had cost Virod rupees. Virod dollars right? Lie return goods which had cost 200 lie. We are purchasing. Okay, so there is one sales return and one is purchase. Chill. There is no return by chill. Sold goods to chill. There is no return by chill. So 1300 minus 5%. See, these are the calculations. So that's why it is advised that first you work out the trade and cash discounts before you post them to their correct amounts. So first, these are so many calculations. See, so many different calculations from there. Though this looks simple, some students make mistakes in even in calculating this. So be careful. So then now we'll come to the main part. So which account will be debited by how much and which account will be debited by how much. So debit. Okay, so purchase goods from car which cost 300 less trade discount. So we are purchasing from car. So Gerard is purchasing from car. So purchases account will be debited. Account will be debited. Car account will be debited. Car account. So why car account will be debited? Because car is giving the goods. He is the person who is giving. Okay. So when we purchase, when Gerard purchased, car gave the goods. He is the person who is giving. This is the account that is giving the goods. Okay, so that's why the account will be created. So amount will be 2700. Amount will be 2700. See this. So now sold goods to live for $600 less 10% trade discount. So 540. So sold goods. So sales account. Sales is an income always. And who is receiving the goods? Lie is receiving the goods. So lie account because he is receiving. Lie account means receiving. So that is why his account will be debited and sales account will be credited. Sales account will be credited. Return goods which had cost Gerard 200 less discount to follow. So return goods which had cost Gerard. So this is who is returning. Gerard is returning. So it is purchase return. So obviously when he returns it will be purchase return. So purchase returns will be exactly reverse of purchases. So purchase returns. Purchase returns. So how much? It is returned to car. So car is receiving the goods. When you are returning back the goods, car is receiving the goods. So he is receiving car account. Car account should be debited. So then purchase goods from link which had cost 2800 before trade discount of 10%. So purchase goods from link. So purchase goods from link means purchase again purchases always purchases. Purchases are always purchases. So purchase account. What's from link? So who is giving the goods? So link is giving the goods. So link account is giving the goods. Okay. Sold goods to Chin for $13. Sold goods to Chin for $13. Sold Chin. So Chin is receiving the goods. Chin is receiving the goods. Chin account debited. Sales account credit. So lie returned goods which are cost $200 less discount. Lie return means lie return. This is you are sold to lie. Just see that you are sold to lie and is returning the goods. Maybe that's why lie is returning. So lie is giving. So you have to give, you have to credit whoever gives, right? So lie account will give credit. And it is sales return. Sales return is reverse of sales. So it is debit. then this is also done. Then now, so this is also over. So this is for this. Gerard paid Khar and Lim the amount due to them after deducting 5% cash receipt. So when you are making, when Gerard is making the payment, who will receive? Khar will receive. So Khar will receive our account, and Lim also will receive Lim account, our account, debit and credit to bank account. But one more thing is that what is the discount account is also there. Gerard paid Khar. So when Gerard is paying Khar, he is not paying certain amount. So which is cash receipt. So it is discount received. So it's an income. So discount received will be credited for Khar it will be 126. Okay. Khar it will be 126. And Lim it will be again here also discount will come. Discount received. So here also it's 126. Both for Khar and Lim, discount received is 126. So bank account will be how much? Bank account will be 2394. What will be the amount? 2520. Or how much? Or you have to do it. 2700. What is the discount? This is trade discount. Trade discount. Trade discount. This. This. Then Lion Chin paid. So Lion Chin paid means obviously money will come into bank. Bank account. So Lion pays how much? Lion pays 342. Lion pays 342. So Lion. And when we pay, when we are receiving lesser here there is no discount for me. Like Lion should cost this. It's not discount, it's discount allowed. So when you pay short, discount allowed is So bank account. So here in this case it is 125. So discount allowed is 65. So children are rated with this purpose. So that is 30. So now we have to prepare ledger accounts and close the accounts. Prepare ledger accounts and close the accounts. So start doing this. So it's risk. So we already done this. So you can do the rest of the part. So if required, you can do it in the rest. So dear friends, last class I had given you the this is assignment from David Hopkins. So this is very challenging because this your concept of so accounts of particular person is very much. So accounts of one particular person. Suppose the foreign transaction accounts of both Brian and Ken. See what is Brian for Brian the transactions will be different. For Ken the transactions will be different. Because he is buyer, he is a seller, and he is a seller. So here you ask name of accounts to be debited, name of accounts to be credited. So you should not get confused. You should not get wrong, get it wrong. So you are not so see, right? So, but here the question is, you have to both the transactions, so both Brian and Kevin. But here they have asked you to write name of account to be debited, name of account to be credited. But who's? This, whatever you are writing here, are these related to Brian or are they related to Kevin? So, what is the best remedy? Let us, for the time being, consider this as the piece of bread. And for Ken, we will write separately. Okay, books of Brian. So what is Brian doing? You have to see from the point of view. So Brian sold goods. He is selling the goods. So it is sales for him. For Brian, it is sales, and for Ken, it is purchases. So when Brian sells, who will receive? Who is receiving? Ken is receiving. Ken is receiving. And when Ken is purchasing, who is giving? So this concept is very deep. Now, Ken sold goods to Brian. So sold goods to Brian. So sold goods to Brian. Sold in Brian when Brian is purchased. Brian is purchased. So it is purchases because these are the books of Brian, right? So you have written in the books of Brian. So it is purchases for. So if Brian is purchasing, who is giving the goods? Ken is giving. If for Brian it is purchases, then for Ken it is sales, and the other side is Brian. So the understanding should be very clear, crystal clear. So don't get confused. Don't get confused. Brian sold goods to Ken. Again, sales. Sales. So again, this can receiving. So this sales for it, it will purchases for this. So then Ken sold goods to Brian. Means Brian has purchased. So then Ken. If it is purchases for him, sales. So this sales this side, then this. Ken paid Brian for the goods he bought on. Ken paid Brian. So Brian is receiving cash and is allowing discount because it is a loss. So he received less. Then who is giving? So obviously Ken is giving. Brian is receiving. Ken is giving. So now Ken paid also cash. Cash is and he's paying less. So if business it is discount received, so it will come. And to who? To Brian. Brian paid Ken for the goods he had bought on 2nd April, let's say cash. So now when is paying? Brian is paid. Brian has paid. Brian has paid. So cash. So he has paid less. Discount. So it is. So here it being discount received for it. Here cash and discount for it. So after doing this, you have to 700 less 20 square per where can debit can with sales. So 800 less 20 so this is debit can with sales. Third, okay. So can so okay, next again credit can with purchases. Okay, can with purchases. What is the date? 900 20%. 60. Purchases. Can with where for the goods bought on first April less cash discount. So credit can with dash and discount. First step, what are we doing there? So we got a discount of 8%. So we will do formula. So this component is moving back and rest is then so cash is the cash flow. Okay. How much? It can for the same amount of second. So then it can be cash and discount. So it can cash and discount. Okay. Cash and discount. Cash. Okay. Okay. So, so now this whatever is not let's say cash second minus the now it is. So so now you have to simply so now you can see how it is. Cash, cash is concepts are clear, going ahead you will get confused. Not about your concepts. Lot of students they ignore these topics. They take it for granted. Like it will just easy. You can't afterwards they get some concepts. So teachers are not need to emphasize on things, redundant things. They are teaching with a purpose. So written just to fill up images, but with a purpose. Please following strictly, doing sincerely, study sincerely. So now, so again, I will take to you, not to you. Even that one, please make a comment in the comment section of the video. I will do it. Otherwise, how to do that? It doesn't make you understand. So then, bye bye. I will dear friends, welcome to Shasha Nature Club. So today we have got problems from books of value 2. So in this lesson we will learn how we record books of value, how to declare books of value. So this is a problem from David Hopkins. So Rutherford has the following transactions all on credit. So purchase goods from recover for $10,000 paid with $10,000 has a cash discount. So Krishna's payment for Purchase goods from Walters will be paid more than less paid under that method. Walters allowed override taxes on cash discount. Sold goods to car of $1 on the less paid discount of 10%. They only count 4% cash discount. 900 return goods business cost is $200 per kilo. Return goods which are cost $400 per kilo. Purchase goods to burger cost 7,000 less paid discount of 25%. Burger allowed in tax discount of 4%. Sold goods to Colgate for $3,000. Less paid discount of 10%. They are allowed 4% discount. Purchase goods from Nicola for $6,000. Less paid discount of 20%. Nicola allowed in 10% cash discount. Car can return goods which are cost 300. Return to burger goods which are cost $1,000. Sold goods to Simon for $1,800. Less paid discount of 10%. Override allowed at Simon obviously cash discount. Receipt checks from Simon garment for respectively. So accounts receivable are free and send check prints of the payment of the amount to become water and water. So that enter the transactions were not limited for penalty and posted in good form with the proper amount. However, for the purpose of activity, ignore the dates and post the transactions to the correct books, the correct journal, and therefore and the correct ledger. So we should record this in the books of revenue. So where should we record this? So what are the books of revenue? Purchase goods, purchase register, sold goods, sales register, purchase goods, purchase register. Sold goods, we have to record in sales register. Minor return goods, so minor, obviously customer. So sales return goods which are cost to Nicola. So return goods to Nicola, purchase return. Purchase goods from this is purchase register. Purchase register. Sold goods to Colgate, sales register. Purchase goods from Nicola, purchase register. Car return goods which are costing 300. Car return. So in car is so obviously to the customer. So sales return. Return to burger. So purchase return. Sold goods to final sales register. So receive checks from Simon, car and Colgate. So we have to record in live for the payment and for the amount received and for the amount we have paid. So now we have to record it. So how do you record it? The first entry. So we'll record entry wise. So first entry, purchase goods from Piccolo for 10,000 less trade discount of 20%. So we don't record trade discount, and we never record trade discount. We have to record the transaction at net amount, so that is at 8,000. So 10,000, 10,000, 20% is 2,000. 10,000 minus 2,000 is 8,000. 8,000 will be recorded in purchase register. So purchase register equal to 8,000. Purchase register equal to 8,000. Okay. So similarly, next. Sale goods to Simon for 1,200 less trade discount of 10%. So sold goods to Simon. So we have to enter in sales register. So 1,200 trade discount of 10%. So sales register 9. So date because it is 9. So for 1,200 less than trade discount of 10%. So we have to record like this. So everything we have to record in each and every book respectively. So sales register will look like this. So So Snyman 1080, TARP 2250, or the 2700, Snyman 1620. So you can see, so it is Snyman, so it goes to TARP, so it goes to birthday, so it goes to Snyman again. So four sales entries are there, so we have to record it in this particular style here. So this is known as format or whatever. So we have to record in this particular way. So the transaction should be recorded in this particular format. So format is important. So then the next one we have to record in purchases. So we have done purchase entries for this. So purchases will look like this. So we have purchased from Piccolo, Walters, Berger, and again from Piccolo, 4800. So we have to enter in purchase journal like this. So take some time to write down, write it. Then we have to enter in sales return register also. So sales return register, what do we write? So whatever sales we have returned, all those entries. So what is this? Let us see what is the sales return. So Snyman, we have sold this item. So Snyman return, which had cost him 200. No, 200. So Snyman 200. So like this, similarly, we have to record all the sales return. Snyman return. Uh, car health return. Car health return. So Snyman and car we have to enter. So the entries will look like this. Snyman 200, car 400. So similarly, purchases also we have to record. Purchase returns also we have to record. So what are the purchase returns? Purchase returns are return goods which have cost 450 crores. 450 crores means obviously Tikula has given 20% credit. So which had cost him 400 means that is the net discount before discount. Which had cost $450 crores. So that is before discount. So we have to take after discount and we have to record it after discount. So return, purchase returns we have to record after discount. So it's not 400. So it is $320 and burger is 140. So we have to record it net of discount. So we have to record it sales register, sales journal, purchase journal, sales return journal, purchase return journal. So we have to record in all the journals. Then ultimately we have to record in calculate for the payments and receipts. So what are the payments that are made? So after doing all these entries we have passed. Purchase goods. So purchase goods particular we have passed all these entries have been made. All these entries have been passed. So now last entry we should check. We should check that. So we have to consider the discount also. The discount part, everything we have to consider. So let us make the working. So here it is. So Snyman, we have sold to Snyman worth this one. These are the return. again we have purchased, again we have sold this one. So total amount is 2500. So totally 2500. We have given a discount of, we have allowed a discount of 5%. So the discount amount is 125. So the net amount 2375 we will be receiving. So, so I have made all the amounts, list of amounts. So these are all sales or purchases. So these are all sales. These are also sales. These are all sales return. These are all purchases. These are all purchase return. Again these are purchases. These are the cash discount. This is cash discount. This is cash discount. So after this is percentage of cash discount and this is amount of cash discount. So the net amount ultimately received or paid is coming. So we have to do like this. So first we calculate. So this is the amount, net amount. These are the amounts that are received, and these are the amounts that are discount. So we have to write it. So where do we write? So all these three guys have paid. Three guys have paid. So how much they have paid and what is the discount? We are allowed them a discount. This is the discount we are allowed. This is the amount we have received. So all these amounts we have received. And we have paid these three people. These three people we have paid. to calculate. So ultimately the payment, the amount we have paid. So this is how the cash book will look like. The amounts we have received from accounts receivable, the discount we have received, the cash we have received, the discount we have received, the cash we have paid. So this is what is cash book, and cash book will look like this. So this we have record, and that is also done. So now what all we did? So we entered, we recorded, we prepared sales register, we prepared sales register, we prepared purchase journal, we prepared sales journal or sales register, sales journal we prepared, we prepared purchase journal, we prepared sales return journal, we prepared purchase return journal, and we have prepared cash book also. We have prepared cash book. So now what is that? So now we have to prepare ledger accounts. So what are the ledger accounts? We have to prepare all the ledger accounts of all the parties. So sales account. Sales account is always a great column. So we are not supposed to record each and every entry. We have to record the total. We have to record the total in sales account. So sales account we have to record the total. So first let us do the total. So this is the total of sales, total of purchases, total of purchases, sales returns, sales returns, purchase returns, sales. So how do we record? So the come to ledger. So sales always is a great column by sales journal. We have to record here. So how much we have to record here. So then sales return, sales return, sales return is reversed. Purchases is always debit. So who purchases total, so total amount purchases total. This is the total amount. Record individual expression purchases account. So we have to record the total. Then purchase return. Purchase return is reverse. So we have to record this. Now we have to record entries related to people. So how do we record entries related to people? So who is capable to follow in the customer? People is a supplier, is amount payable. So we have to credit it. So purchase. Purchase we have to record. So next we go to 8,000. Purchase return is also there. Other purchase return. Purchase return is paid on. So then we have paid. So we have got some discount. Discount received is $24. So amount we have paid. Amount we have paid is cash. Amount we have paid. So you can see the cash. So we have to see here and then. So one more. Now let us check. So now we have all this. So okay, so finally we have paid it. this is how the each and every account. So you have to make the you have to do the posting. So then accordingly you have to prepare all the ledger. So now we prepare ledger account. So we have to see the transaction itself, and then accordingly we have to prepare. So below we have purchased. We have purchased from below, and there was purchase return of 320, and we have, and ultimately we have paid. So this is how we have to record, seeing the debit side, credit side very carefully. Then Nicholas account is over. Now we have to prepare Snyman account. So Snyman is a customer. We have sold goods to him. So we have sold. We have returned also. So we have received. We have allowed a discount, and we have paid. So what are the amounts? Sales, sales, sales return. So the discount allowed, cash. So Snyman's account is also done. So now Walter's account. Walter is a supplier. Is a first level we have purchased from him. So these are the purchases. We have received discount, and we have paid cash also. So the discount we have received is 650, and cash we have paid is 6,840. So we can see from the cash flow. Then again burger also we have purchased from burger. So 5,550. So they are purchase details as well. So we have paid cash to burger. So what is the discount? There is no discount. There is a discount. So just see. Then let us move to this. So move the burger about the discount. We have to record this. So then parts car. So we have sold this to car. So we have to enter sales. We have to prepare car account. We have even made the sales account here. So we are loading discount. So we have to record that. And we have paid. We have received cash. So even that. Then parts account. If the customer we have sold it. So 2,700. And we have done some discount, and we have received that amount. So that so what is left? Burger account. We didn't give discount. Let us check whether we did give discount. We did put discount on burger or not. Burger, yes, 170 we paid it. 4,000 burger. We received discount of 170. We received discount of discount of 170. So cash we have paid. So this is the amount of cash we have paid for that. Then which account is left? We have to prepare discount allowed and discount received. We have to enter discount allowed and discount received. So discount allowed now we have received. So that is discount allowed. We have allowed discount to these three people. Receivables. We allow discount to account receivables, right? So we allow discount to receivable. So we allow discount. And discount amount is always a loss expense. And what is the amount? Amount also is always discount that we have. So and we have received discount from the account. So we have to record here. So it is a discount. So it is debited. So who are the payable? Who are the accounts payable? These three are accounts payable. Piccolo, Walter, and Piccolo, Walter, and Jupiter. We are accounts payable. So we have discount from them. So the amount is this. So the amount is okay. So this is how we have to see the chapter is very simple. That unless otherwise you do all these things, unless you do all these steps, your understanding will not be clear. Your understanding of the subject will not be clear, and ultimately will get stuck in accounts receivables, accounts payables, even the advanced entries, whatever are required at that time will get stuck. So they look very simple. So at least one or two problems you have to do. So kindly ensure that you do this problem without fail. So then this is done. So what I do is I will give this problem as a assignment to you. So this is also from David Hopkins. So you can just try this problem on your own. So then, if you have any doubt, you can let me know in the comments. I will help you work out. I think you can do it on your own. So I'm 100% sure. So please try and use it. So we can move on to the next lesson. So this is very simple. So one or two problems are more than sufficient. So if you want, you can do this. So if you let me know in the comment section, I will definitely do it. Otherwise, I will assume that you have understood and it's very simple. So we'll move on to the next lesson. So next lesson is how to balance the account. How to balance the account. That is what we are going to learn in the next lesson. So till then, bye bye. Dear friends, so we'll continue with the books of biology. So this is another problem which is there in David Hopkins. So prepare journal entries with suitable narratives to record the problem. So prepare journal entries only to ledger accounts, never to other books of trial entries. See here, journal entries with suitable narratives to prepare journal entries only to ledger accounts, never to other books of trial. Received from invoice number 506 dated 3rd March 10,000. This was in respect of the purchase of a machine on credit. So this is the purchase of machine on credit. Okay, so it is purchase of machine. Machine is an asset. So it is not purchases. So it will not be recorded in purchases account because it is not purchase of merchandise. So it will be recorded in journal. So the entry will be recorded as machine account debit to Mumtaz. Why? Because we are purchasing from Mumtaz. Okay, we are purchasing machine from Mumtaz. So the entry will be machine account debit to Mumtaz. fields they are not mentioned. So they have mentioned just A. Okay, invoice number 506. Purchase of machine on field. Amount is 10,000. So you have right the direction. That's all. So we have to record it. So it will not go to purchase account. So no subsidiary. Books of payment fee, book of payment fee. So we have to record it in journal form. So next, invoice number 495 dated 6 months, sold to Wayne. Goods sold to Wayne. The invoice has been entered twice in the sales. So has been entered twice, has already been entered, but it is entered twice. So we have to pass rectification entry. So what is the entry when we make the sale? When we make the sale, the entry will be Wayne to sales. So now we have to reverse the entry. Wayne to sales. Now it will be sales account. So the amount is 675. Sales recorded twice. Now reverse and repeat. So this is also next. So then we'll see what is the next entry. Invoice number 998 dated 7th March 2023 in respect of delivery van purchased on credit from business and paid by check. So delivery van purchased on credit from business. Delivery van purchased on credit from business. So 40 to 50. 4,000. But you see, what is the entry? What is the question? Invoice number 998 dated 7 March from Yunus and paid for by check. So there is a check payment also, but we should never record check payment because check payment will be recorded in cash. So only first part, which is purchase or trade from Yunus, only that will be recorded. So remember, if you record payment entry, then it is wrong. Very wrong. So never do. Okay. So accordingly, you have to be very careful when writing the entries. So all these entries, which never come in any of the other books, will always come in journal format or general journal. So this is general journal where we are recording because none of these entries are capable of being recorded in any of the prime, neither in the same book nor in purchase book, neither in purchase return nor in purchase return nor in calculation. So other than that, whatever is there that should be recorded in journal format. So next, credit note number 103 dated 10th March 1 of $190 is sent to Brownie but omitted from the sales return. So you have given credit note but you have not recorded in the sales return journal. Now you record it. So sales return journal. So how do you record it? So what will be the entry? The entry will be, you have to write down in sales return journal, and then the next step is you have to write down the journal entry, that is like you have to record the entry. So how do you record? Sales return upon debit to Brownie account. So you have to credit Brownie. Sales return upon debit. Debit to Brownie account. What is the amount? 190. So in the base there are entries to narration. So 190. So it's narrative. So it's 100 of narrative. Sales return. Now sales return. Now recorded. Next. Invoice number 854 dated 15th March 1300 for goods purchased from Sandra. The invoice has been posted to Gita's account in error. So what has happened? It has been posted to Gita's account. It is entered in purchases account, but the posting has been done wrong. The posting is wrong. So instead of posting to Sandra, the posting has been made to Gita. So it is purchased from Sandra. So you should have credited Sandra. Instead of crediting Sandra, you have credited Gita. So what you have to do? You have to credit Sandra and debit Gita. So the entry will be Sandra upon debit to Gita upon debit. So the entry will be Gita upon debit to Sandra upon debit. Gita upon debit. how you have to solve the rectification. So here you can write it should be in debit column. It should be credit. Machine account debit, Total account credit, sales account debit, balance account credit, delivery gas account debit, finance account credit, sales returns account debit, Romney account credit, visa account debit, standard account credit. What is the amount? So the amount is 1300. So all these are rectification entries. So if you observe, all these are rectification entries. None of these entries will come either in the books of private, either in sales register, sales this one journal, nor in purchase journal, nor in sales return journal, nor in purchase return journal, nor in cash book, neither of the books that will come in the serial credit journal box. So carefully you have to do this. So this is how we have to record. So this very important aspect. So the entire chapter is based on this suspense account, rectification, suspense account. Lot of questions are asked in AS level. IGCSE also a lot of questions have been asked. So you have to be very thorough in this aspect. That debit and credit aspect you have to be very. So we'll catch up in the next class. Till then. Yes, ma'am. These are exam practice questions from books of private. So this is again from David Hopkins. So let us discuss. So exam practice question. So this is basically number one. Volume purchase goods for 1000 less 25% trade discount. So trade discount is never recorded, but should be considered. So that is 1000 minus 25% is 250. She was allowed a cash discount of 10%. So cash discount will be considered at the time of payment. So entry will also be passed. What amount should she enter in her purchase journal? Purchase journal she has to record 750. So discount is never recorded at the time of purchase entry. Trade discount is recorded. Trade discount is recorded, but cash discount is not recorded at the time of in the purchase journal. It is not recorded in purchase journal. Next, Lara purchase goods costing 1800 less trade discount of 30%. So 1800 minus 30%. So that is equal to whole 60, 1000 plus 60. Okay, so she was allowed a cash discount of 5%. She was allowed a cash discount. She has to pay less. So how much she has to pay less? She has to pay 63 plus 5%, 5% of this. So 63 less. So this should be how much should Lara have to pay for the goods? This is 1 month. So that is subtract 200 with 1 month. These are exam style questions. So similar questions have been asked in the AS level examination. So these are not A level exam, A level, but AS level. So but IGCSE also they have been asked. then coming to this Cora says I invoiced Maria for 2000 less 20% credit. So Cora said I invoiced Maria for 2000 less 20% credit. So okay, so 20,000, 2,000 less 20% credit count is 2 to the 4, 1600. So, so great discount will be considered, but never recorded. So we have to take the net amount. So 1600 it should be recorded as 1600. Cora has omitted to enter. She has omitted. So Cora has so has sent an invoice means she has sold. To enter invoice sales limit. She has not entered the sales limit. So obviously what will happen? Sales account will be understated by 1600, not 2000 because trade discount will be recorded. So even Maria's account also will be understated. So 1600. The answer is so that's coming. Shivam has received a check of $1540 from Rajan to settlement of credit of 7,100. How should this be recorded in account? So what has happened? Shivam has received a check. So he has received a check of 1540 from Rajan to settlement of 1,700. So it is a discount factor. It is a discount factor of 1,700 minus 1540 is 160. So this should be recorded. Discount alone should be recorded. And how should this be recorded? So nowhere this should be recorded. Bank account this should be recorded. And this should be recorded. We have to consider. Okay. We have received 3 accordingly, the debit and credit has to be very, very clear. So, practice these questions again and again. Often, more and more questions you have to practice. So, maybe a lot of MCQs we can discuss in the meantime, but before that, let us go through the entire syllabus so that the concepts are clear. Otherwise, just by solving the question papers or just by working out the question papers near the exam is not sufficient. Remember, slow and steady wins the race. So never ever pick up shortcuts, never resort to shortcuts. Start studying from day one. So start studying from the day one. So let's catch up in the next class. Basically, the next class is how to balance the account. Till then, dear friends, welcome back to Shasha Subject class. So this is balancing of account. So this is a question from David Hopkins. So basically, it's a very small question. So, but this lesson will go to learn how to balance the account. So balancing is nothing but totaling of all the values and then finding the difference and putting it at the right place. So that is what is balancing of. So this is the last step before preparation of trial balance. After this, you will be preparing trial balance. So before that, you should know how to balance the ledger amounts because trial balance is prepared on the basis of balances of ledger balance. Balances of ledger. So in this question, this is a small question. So first, let us make a list of debit and credit so that our writing ledger entry So paid into savings, paid is savings into business bank account. So bank account, money is coming in bank account, and capital. So bought goods for resale or paid from store. Bought goods to purchases. Paid rent of a shop by check. Rent. Sold goods to bargain on credit. Sales. Bargain. Made cash sales of goods. The money was used to supply cash flow. Made cash sales of goods. Cash. Return faulty goods to Joe. Return. To Joe. Joe paid by check for the goods he had bought after deducting a cash discount. So you have paid him. Paid Joe by check. So we have paid to Joe and we will receive a cash discount. So the discount received. So then by check means obviously it's bank. Then paid for postage by cash. So postage. So now we have to prepare all these amounts. Bank account, capital account, purchase account, due account. So ledger account, prepare necessary ledger account, read column cash, record the transaction. So most of the entries will come in cash book also. So and some entries will come in ledger account. So then balance the account at 31st March and bring out the balance. So we have to balance. So then what we do? So we'll start preparing all the accounts one by one. Okay. So capital account, purchases account, due account, rent account, bargaining account, postage account, sales account, purchase returns account, and discount received account. So all these accounts they have to open. So now, what is the first entry? Paid in savings into bank, business bank account, 10,000. So that is on March 1st. So March 1st, bank account should be debited with capital and capital account should be credited with bank account 10,000. March 1st. Capital account should be debited with bank 10,000. So then credited capital account will be credited. So capital account will be credited on March 1st. So bank account Then first entry is complete. Bought goods for resale on credit from Joe. Bought goods for resale on credit from Joe. So that is a mark again. Purchases to Joe. Mark again. Purchases. And we are supposed to be purchases. So what is the amount? Amount is 4. Then what is the next entry? Paid rent of shop by check. Paid rent of shop by check on the same day. Paid rent of shop by check. So mark again. Mark again. By check me. Bank account. What is the amount? The amount is 1,000. So the entry is complete. So now come to the sold goods to buy me on credit. 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 What date? So it's on 3rd March. So you know why it is debited, why it is credited, right? So this all these aspects are clearly explained in chapter 1 and chapter 2. So if you have any doubts, you can just revert back to chapter 1 and 2 to see which account is debited and why and all, so that the concept is clear. So don't assume presume without half knowledge, don't try to do the problem. So be sure, 100% sure before passing the entry. So don't commit any mistakes so that the concepts are clear. So if the concepts are not clear now, then everything will go wrong. So the amount is 2000. So everything will go wrong. So be careful. Then, so the entry is complete. Sales entry was complete. Made cash sales of goods. The money was used to set up cash cash flow. So you are receiving cash on selling of goods, cash sales. So cash sales are happening. So sales are always sales, whether they are cash sales or credit sales, or if you want, you can write it separately, credit sales and cash sales separately. So this since this is simple column, it's okay. You can write both merged together. So cash you are receiving. How much you are receiving cash? Is 560 bucks. So 560 you are receiving cash. So when is it? Is on 3rd March. 3rd March. So March 3rd. So cash. So that way you can write sales also. Not an issue. It's not wrong to write sales. And in cash policy, right? So what is the meaning of cash note? To keep it handy. Keep it handy. Cash to keep it handy. They have sold some books and they have kept them. So sales is sales is cash account. Okay, now coming to the next part. Return faulty goods to Joe. Return faulty goods to Joe means from Joe we have purchased, now we are returning. So it is purchase return 200. Fifth, on fifth there is purchase return. On fifth there is purchase return. How much? 200. Don't forget to mention the currency. So to whom we are Joe we are Joe is about so March 5th. That is the value 200. So 200. So now it is complete. So now come to pay Joe by check the goods we have bought after deducting 5% cash discount. So cash discount. So we have to calculate how much we are paying. So 4,000 is the very well. So 3,800, 3,800, we have to pay 5% cash discount. You have to deduct and pay 3,800 minus 5%. 3,800 minus 5%. You have to deduct and pay. One ninety is the discount. 190 is the discount. 190 is the discount. So you are paying Joe. Joe discount. So 190 is the discount. How much you are paying? 3610. 3610 you are paying. So when you are paying this, you are paying this on 7. So you are paying this on 7. So you are paying this on March. What is the amount of revenue you are paying? Okay, okay, don't worry. Okay, okay. 1,000 and you paid it when such. So this is also done. Now, paid for postage by cash 20. Paid for postage by cash 20. So paid for postage by cash what is 750. Postage. Postage account. By cash. So postage account you have entered it. Postage account also. So you have entered postage. Cash 27th March. March. So Joe, you have paid, right? So where is the thing is getting to Joe's place? You have paid to Joe. How much you have paid to Joe? Yeah. So cash discount, 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 and you have paid the bank account is 8610. One nine three is the discount issued. So discount issued also should be entered. Discount issued again. So Joe has Joe discount. So 190. So entries are over. All the entries have been made. So please cross check whether all the entries have been done. So you can cross check, I'm sure, but you also cross check. Then now prepare the necessary ledger amounts and three column brackets. So we have prepared three column brackets. Balance the accounts at 7th March and break down the balance. Now we have to balance and break down the balance. Now this part is remaining. So we have to learn how to balance the account. So this we are going to learn. This is the main thing we will be learning in this lesson. So come to cash book. So cash book, what we have to do, has everything been entered in cash book? Cross check one, everything has been entered. So then what we have to do total it up. So you total it up like this. So when you total it up, obviously okay. So you see in the cash column it is a total of 550 on the debit side. Bank column there is a total of 10,000 on the debit side. Discount column there is nil. Here discount column there is 190. Cash column 20 is in credit side. Bank column there is 4612. So how you have to balance this side is heavier, this side is heavier, this side is heavier. So this minus this side minus this side, this minus this. So basically balance carry down your pressure. Balance carry down your right. Then what you have to do? You have to find the difference of this value and this value. You have to find the difference of this value and this value. So whatever comes, that you have to. So is equal to 10,000 minus 4610. So 5390. See, when you put this value, this both will become equal. So the total should be such that whatever amount you put, the total will be same. This should be same. So to find that we have to that balance. This is the balance. That's why it's called balance curve. Similarly, here it is 550, here it is 20. So what you have to do? Here also 550 minus 20, 530. So that even this both the total becomes 550. And what about discount column? No, never. Discount column should never be balanced because it is just it is not part of the entry. We are just posting it. So we should not. We have to write this directly to the ledger amount. So it is discount received. We have to write that. We should never balance it. Remember, we should never balance discount column. Never balance discount column. The balance discount column is wrong. So when you are doing cash book columns in AS level and IGCSE, you may have one or two here capital account should be balanced. So now coming to here, this is the cash book is over, cash book is done. So this is known as the both book of prime entry and book of secondary entry of it is ledger also because cash it is cash ledger and bank ledger. So it is cash ledger, bank ledger. So that's why we never record, we never prepare ledger account for cash and bank. It is both. So it is both primary and secondary book. So now we have left out with the other account. What are the other account? Capital account. So capital account this side is 10,000. So this will become so that both the sides are equal. So this is how did you get this? This is 10,000 minus 0 because nothing was there on the debit side. So the same value will come. So here the amount is same. So this will become balance carried on will become balance got down. When is this? This is March 7. So total 10,000. So balance got down is this again balance. Okay. So normally nominal accounts like purchase account and sales account they are not balanced. Why they are not balanced? They are directly taken into trial balance. They are just total and taken into trial balance. So rent account is not balanced. So you have to just total it up and take it directly to trial balance. So Joe's account. So if you see both the sides are matched. So both the sides are same. So there is no question of balance at all. So if they are already balanced, there is no balance brought down or carried on. So there is no difference. So that's why we should not do it. Then rent account is a nominal account, expense account, so it is not balanced. So just we have to total and take it to the balance directly. Barney account. Barney is a customer. So accounts received. So we have to balance it. So the it should be balanced on so March 7th. It should be written as balance carried down. So that will be same amount 2,000. So again, totally same 2,000. Total should be same on both the sides. Remember, both the sides totally. So these are the totals. So what happens is 8th March 8th, they become opening balance. March 8th, they become opening balances. They become balance brought down. We have to bring down the balance. So that is 2,000. So postage account is not balanced. It is a nominal account directly transferred to bank balance. Sales account directly taken into sales account directly to trial balance. There is no question of that. Purchase return is not those. They should purchase directly taken to the trial balance. So discount into zero account directly taken to trial balance. So what should be balanced is only the personal and real accounts and the assets and liabilities. So always assets and liabilities should be balanced. So whether they are non-current assets, non-current liabilities, current liabilities, only they should be balanced. In other words, the balance sheet items. So they are called the items of balance sheet. So these are assets. So cash is an asset, bank is an asset. So it is something which we always keep. So it will always be running. So that is right. So see here, balance carried on will become balance brought down in the next year. So it was balanced on dollars and $5,390. So which became opening balance on 8th March, that is $530 and $5,390. So this is how we have to balance. So this is done. Okay. Hello, dear friends. This is one simple lesson with the classification of forms and division of the ledger. So we have seen in part one, we have already explained this. So this is a simple practice exercise, just Krishna. So in just complete the following table to indicate whether or not following procedure is a purchase of motor vehicle, motor car is definition of the cost. Okay. So we can calculate. So then the payment of wages to employees is revenue expenditure. The account of customer has been sales. The account for customers has been sales by the amount. So repairs of the office windows is an example of capital expenditure. False. The purchase of the stationery is revenue expenditure. The sales account is a nominal account. The figure and fixed account is a real account. Fixed and fixed account is a real account. Suppliers accounts are kept in nominal nature. False. They are not kept in nominal nature. They are kept in specific suppliers account payable nature. The day-to-day cost of running the business are an example of this. To complete the following sentence, respecting the correct word for the following is the sales account records the dash of the business as an example of dash. Complete the following sentence, respecting the correct word for the following. The sales account records the revenue is an example of nominal revenue. Nominal. The budget of information is an example of capital. Non-correct. Count is an example of small item expenses expenditure recorded in particular. A dash asset is for what to keep the business for long term. Non-current. So here it's not non-current. It's capital. Capital. Okay. Very simple problem. So we welcome to Shasha's upstairs class. So today we will be discussing trial balance. How to prepare a trial balance and so here you can see there is a practice exercise. This is from again from David Hopkins. So you can see we are doing all the people prepare a trial balance as at 31st March, 31st December, 2016 for the balance extracted from assets, books, and calculate the balance from the capital. So we are supposed to prepare the trial balance. So how do you prepare the trial balance? So the trial balance, the format of trial balance is considered. So trial balance as on particular debit. So it is a statement. Right? So it is a statement. That's why it is trial balance as on December 2015. So they have to just plug in the figures. So they would have given the details. We have to just plug in the figures. What will come in debit and what will come in credit. Sales will always come in credit. Sales figure is always come in credit. Sales will always come in calling always come in credit. Purchases always credit. Purchases is always credit. So you have to understand this. Whatever you have learned till now, you have to apply and then you have to prepare the trial. So coming to the question again here, see the question is here. So remember one thing, before preparing trial balance, just remember one thing. Assets and expenses are all debit balance. Okay, assets, real account assets, assets means uh, plant and machinery, bank. So all these are assets. So all these are expenses. So purchases, wages, heating and lighting, all these are expenses. Are all debit balance. They should be all be debit. So this will always be debit balances and they should appear on the debit balance. Okay. So remember this. So this is very much helpful. Very basic foundation to for balance. Then liabilities and income. Liabilities and revenue are all debit balance. Liabilities and revenues are all credit balances. So what are liabilities? Liabilities are something we owe, right? So liabilities can be internal as well as external. So internal is capital. So external are like loans, accounts payable, all those are liabilities. So payable, all payables are liabilities. So these are all external liabilities, these are internal liabilities. So whether they are internal or external, they are always credit balances, revenue or income are all credit balances. They always your income income. So unnecessarily don't exaggerate, learn a lot of things, nonsense and all. Just remember this. You can do. You have to just identify whether the given particular item is debit or credit. So sales is a revenue. So it is an income, it is a credit balance. So sales return is a debit balance. So purchases is a debit balance. Purchase return is again credit balance. Wages is again debit balance. Heating and lighting expense debit balance. Rent payable expense debit balance. Rent received income debit balance. Advertising expense debit balance. Postage and telephone expense debit balance. Discount allowed expense debit balance. Discount received income debit balance. Land and machinery asset debit balance. Delivery van asset debit balance. Bank balance asset debit balance. Trade receivable asset debit balance. Trade payables liability credit balance. Drawings opposite of capital, it is always debit balance. Drawings by default credit balance, but it is balanced here. So you have to put accordingly. You just put it on the debit side or credit side, and then you can you total it up, you get the value. So we'll just do it. So we can prepare the trial balance. So seeing the question. So here you can see this is the question which is available. So you can note down or take a screenshot or whatever. Or if you have it the textbook, you can use it. Or take the screenshot and then you will just finish that. So now sales is an income, sales return is an expense, purchases is an expense, purchase return is an reverse of purchases, wages is an expense, heating and lighting is an expense, rent payable is an expense, rent receivable is an income. So it should come on credit side to justify it. So advertising is an expense, postal telephone is an expense, discount allowed is an expense, discount received. So see rent receivable. So rent receivable is an income. So discount received is an income. Plant and machinery is an expense. Is an asset. Always a debit balance. So then delivery van is an asset. Always a debit balance. Bank is an asset. Debit balance. Trade receivable is an asset. Debit balance. Trade payables is a liability. Drawings always a debit balance. So then when we total it, we get this value 210,000 and 125,000. So capital will be the balance. So what we can do is 2,10,000, 210,000 minus 174,000. So both tally. So this is balance. So it's very simple. Just you need to know this concept. So just remember, all assets and expenses are all debit balances, all liabilities and revenues are all credit balances. Just remember this simple funda, very simple, very so easy marks if it comes to the question. I have the question based on it, whether it's easy marks. So don't miss out. A lot of questions are based on this balances, concept of balances. We often using this technique in solving a lot of problems. So be prepared. So we'll just finish this and we'll just see the next problem. So next problem is an inexperienced bookkeeper has accepted trial balance as at 31st December from Apple. It contains some errors and does not balance. Premises, this is correct. Outline this is correct. Opposition is correct. Wages is correct. Rent payable is an expense, so it should not come here. So it should not come here. It should come here. So heat and lighting is correct. Officer of business is correct. Sales is correct. Purchases is correct. Discount allowed is an expense. It should come here, not here. So discount received is an income. It should not come here. It should come here. Bank account is a debit balance, correct. Credit receivable is that is correct. Trade payables is a liability, is correct. So purchase returns. Purchase returns are opposite of purchases. It should come on the debit side. So it should not come here. It should come this side. So sales returns. Sales returns are reverse of sales. They should be debit balance. It should come here. Then receivable. They should come this side. Capital is a liability. Drawings should not come in a drawing section. So that's it. So you can do this as a assignment. So it's very simple, very easy. So this chapter is done, and this is the end of bookkeeping. So we'll see. We'll start financial accounting. Okay, bye-bye. So dear friends, so welcome to Shobha's virtual classroom. So we'll be doing exam practice questions. This is again from David Hopkins. Similar questions are being asked in base level examinations. So this is from statement of financial position. Okay, so statement of financial position. Now, multiple choice. The purchase of an office computer has been debited to office expenses. So where should that be debited? Office should be debited to non-current assets, right? Because it is office computer, it is not current asset. So we should go to non-current assets. Whereas they are debited to office expenses. So what has happened? The profit has come down. So the profit has come down. The profit is over understood. The profit is understood. The profit is understood. And even net current assets is also understated because it has not been shown as a part of non-current assets. When you don't show, then the assets will be understated, right? So this is the change. Okay. Then next one. So the owner of the business has taken goods for her own use, but no entry has been made in the books to record this. Oh, so it has not been made. So what happens? What way will show the effect of this on the statement of financial position? So what happens? Inventory will be showing higher. Inventory will be showing higher because inventory has not been recorded. Drawings has not been recorded. So it will be showing. It will be overstated. What will be overstated? Inventory will be overstated. So then what happens? And even obviously the double effect to complete the entry, you will not have debited to capital account. So the capital also will be overstated. So this is the okay. So the following information has been extracted from the statement of financial position as of 31st December 2015. Non-current assets of the is 10,000, working capital is 20,000, long-term loan is 20,000, profit per day is 25,000, drawings is 20,000. So non-current assets, working capital. So what are the steps? You have to add non-current assets and working capital, right? So you have to add the non-current assets and working capital. So that will be 3,40,000, 340,000. So long-term loan we have to subtract because it is non-current liability. Non-current liability we subtract. So that should be 320,000. So 320,000 is net assets. So we have done the column already. So net assets should always be equal to capital. So what is the net assets? Net assets is 3,20,000, 3,20,000. So what was the balance on the capital account of 31st December 2015? So this has no relevance. This has no relevance. So if the concept is clear, you will not even use these two items. You will just straight away see this and you will select this. So that's why the concepts are very, very important. You have to clearly understand the concept. If you are not understood the concept, solve MCQs, be careful, carefully you solve the MCQs, or explore all the actions, be conceptually perfect, be conceptually strong to secure for A plus in A levels. Okay, so don't be it, never be. So which of the statements is not correct? Assets is equal to liabilities plus capital. Correct? No, liabilities, assets is equal to liabilities plus capital. Because assets is equal to liabilities. So capital is also internal, so internal liability. So this is correct. Okay. So capital is equal to assets minus liabilities. This is also correct. There is no between. Assets minus liabilities is equal to capital. This is also correct. Then capital minus liability. Capital is also liability. This is also liability. They cannot be equal to assets. This is wrong. So this is the correct answer. So liability is equal to assets minus capital. Correct. Assets minus capital will always be equal to liability. So you can do this using the formula. So the substituting here and there this one. So you know that, right? So assets is equal to liabilities. So you might have already done this in basic accounting, like accounting equation. So you might have done a lot of maths to do this. So this is the first lesson that is taught in accounting. So you must be knowing this. So when you just specify this, when this comes this side, it becomes minus. When minus comes this side, it becomes plus. So all these things, if you know this simple math, then you can do this. So simply, so this is the answer. So this over. So we have covered statement of financial position, one simple problem, one simple one. We have done MCQs also. So we have understood the concept very clearly. So please share, please spread the knowledge, please share so that others also get the benefit of my classes. Okay. So please share. Thank you. Have a good day. Good night. Dear friends, welcome to Shastra's virtual classroom. So today we'll be discussing statement of financial position. So we'll be, this is very important class. So please have patience and focus on this. It's very important. Okay. So statement of financial position. Financial position. So first step. First step is non-current assets. Very important. Okay. So non-current assets. First, you should understand current assets. So you have to make a list of non-current assets. The diagram is given. So from that you have to make a list of non-current assets. So what are the non-current assets? Non-current assets are those assets which are intended to use in the business for a period of more than 12 months. For a period more than 12 months from the date of financial. So very important. Okay. So non-current assets are those assets which are used, which are meant to be used in the business for more than 12 months from the date of financial. So what are financial statements? Statement, income statement, statement of financial position, and cash flow statement are known as financial statements. So basically here, what all is included? So you have to include, you have to prepare the list in such a way that most permanent ones are written down. For example, land and building. How many years will you use land and building? Maybe forever. So land will be used, you will never intend to sell. Normally you will intend to sell, and building maybe you may again you may change it after maybe 15 years or 20 years or maybe after 25 years or 30 years or something like that. But land will machinery. Okay, so plant and machinery. So plant and machinery, maybe you can use it for at least 10 to 15 years, unless there is any technical changes. So the next one. So then comes vehicles, motor vehicles and vehicles. So because we will be using them for a small longer period. Then comes furniture. So non-current assets are those assets which are intended to be used in the business for more than 12 months from the date of financial statement, and they should be written down in the order of purchase and sale. So first land and building, then plant and machinery, vehicles. So based on whatever the items the business has, based on that you have to use your common sense and you have to prepare the list. So that is the first step. You have to prepare. You have to write down the list of non-current assets. Then second one is current assets. So what are current assets? Current assets are those assets which may vary. So immediately after 12 months, if they say in the very next day, they may change. So they are inventories. So what are inventories? Inventories are merchandise which are lying in the business after the day on the date of preparing the financial statement. So inventory. So that is one thing. Then trade receivables. So what is trade receivables? Trade receivables are trade customers. Trade customers from whom we have to receive money. So to whom we have sold and paid, and we are supposed to receive money. And the third one is cash and cash equivalents. Cash and cash equivalents. What are cash and cash equivalents? Cash and cash equivalents, it can be cash and cash in hand, cash in bank. So maybe those fixed deposits which are immediately which can be immediately materialized, like very short term cash deposits. All those are cash and cash. Cash and bank assets. So we have this order is important. So it is recommended that the order of these assets should be in this particular order. So again, the items they are based on the question. So whatever details have been given in the question, based on the items that have been given in the question, so the current assets, list of current assets should be. Then third one. Then third one is current liabilities. So remember, this is with regard to financial statement of sole trader. Okay, these are with regard to the financial statement of sole trader. Because when you are preparing financial statements of company, the format is entirely different. The format is entirely different. The items are same, but the headings are same, but they have to be sure that the form of presentation is entirely different in case of companies and other entities. So be careful. So this is meant only for sole traders, and you have to learn this. You have to learn this how to go ahead with this preparation of statement of financial position, current liabilities. So what are current liabilities? What are current assets? Current assets are those which change within a period of 12 months. Inventories today, inventories may be something else. Tomorrow there may be something else. You keep buying and selling the goods. So similarly, trade receivables. So you keep selling, you keep receiving the money, so they will not be same. Cash also, cash will be receiving in paying, so that's why this will not be same. So because of this, all these are what do you say? They are dynamic in nature. They are dynamic in nature means they keep changing. So this is another way you can remember. You can just use your common sense to identify and make a list of current. What are current liabilities? Current liabilities are trade payables. Okay, so what are trade payables? So credit suppliers. So you have purchased goods on credit. You have to pay them after some time. So maybe after 30 days, after 25 days, 40 days, after that. So you have to pay immediately. It is payable within the period of 2 months. So this also within 2 months. Okay, so trade payables. So again, what is the bank overdraft? What is bank overdraft? You might have bank. You might have made arrangement with the bank that to take money for a shorter period. So that is what is bank overdraft. So then what you have to do when you are preparing the financial statement. So remember, first you have to write non-current assets. Non-current assets you have to write. Then you have to write current assets. Then the current assets. The figure total. So then this one again current liabilities total. So what you have to do is you have to find out current assets minus current liabilities. So calculate current assets minus current liabilities. So that is called working capital. So what is current assets minus current liabilities? So 2 minus. Though you are not required to write what is working capital, you don't have to write this. This is just for you to remember so that you don't mess up when you are working out the answer. So always remember 1, 2, 3, 2 minus 3. So whatever amount comes, you have to write. Then 4. So non-current liabilities. So what are non-current liabilities? Liabilities that are payable after the period of 12 months when the date of balance sheet. Okay. So more than or after 12 months when the date of balance sheet. For example, bank loan. So bank loan normally when you pay, you will pay after the period of maybe pay after 2 years, 3 years, or 10 or 15 years also. So that's why it has payable after the period of 4 years. So what is the example, just example for this? Maybe you have taken a bank loan. So maybe you have taken long-term loan for 1 year. So which has to be repaid after a period of 4 months from the date of statement of financial position. Okay. So then even that you have to add. You have to add this. You have to add and this. So you have to add bank loan, long-term loan. So you will get one figure. This item you have to subtract. You have to subtract from this, and this is called net assets. What are net assets? All working capital minus working capital. So net assets are nothing but non-current assets plus working capital minus non-current assets. What is working capital? Working capital is nothing but current assets minus current. So very important, don't get confused with, don't confuse yourself. Very important. So first we have to find out non-current assets. So that we have to add working capital. So what is working capital? Current assets minus current liabilities. Current. Okay. Current assets minus current liabilities will give working capital. So from that again you have to subtract non-current liabilities. So that gives net assets. So then the fifth item. What is the fifth item? Fifth item is owners equity. Fifth item is owners equity. Okay. So what is owners equity? Is capital at the beginning. Add net profit. So less drawings. So the net amount will be the capital. Owners equity. So the net amount will be owners equity. So ultimately this should be equal to net. So we finally net assets is equal to owners. We have to follow this steps particularly in this particular order, specific order. Just follow this. You can do any time problem in statement of financial position as far as sold returns are concerned. So you will just write out another problem, one simple problem to demonstrate this. How to find out how to prepare statement of financial position. Till then, have a good day. Goodbye. Good night. Dear students, dear friends, welcome to Shasha Concept class. Today we will focus on important points in income statement. So they are very important in the sense that most of the students they commit mistakes. Often they think whether we have to how to treat a particular item. So to start with, important considerations in preparing income statement. So income statements are often prepared in vertical form, since it makes them easier to read. You should study and learn the vertical form carefully until you are quite familiar. So there are various forms. There is the horizontal form also and there is vertical form also. But 99% of the cases you will be doing vertical form. So you will be preparing income statement in vertical form. So it is very essential for you to study and learn the vertical form carefully until you are quite familiar, so that you can work out the problems. Do not prepare journal entries for the income statement unless you are specifically asked to do. They might have been shown the chapter simply to help you understand how it is done. Okay, so there are so many entries. If you look into the chapter, income statement chapter, you will find a couple of entries. They are not important. They are not important. So you don't have to prepare unless otherwise they are asked for. So you can just know it. So in the examination, unless otherwise they are asking you to pass journal entries, you are not supposed to. The heading is important. Okay, so the heading when we start any problem, the first thing the heading is very important. The fact that the income statement for the year or not there. So you have to write the income statement for the year ended. The statement covers a period goods taken by trader for personal use. Some goods, sometimes the trader may take out some goods for his personal use. So what we have to do, deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So there are given selling price also. So you should not get confused. You have to always deduct at cost price. You have to deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So the adjustments will be reflected two places. Carriage inward. Carriage inward is taken as part of cost of sales, not an expense. Okay. So carriage inward is what is carriage inward? Carriage inward is the amount spent on getting the goods inside the premises where goods are being traded. So that is why they are called carriage inward. So to bring in the goods inside for the trading purpose. So that's why they should be added to cost of sale. To sell the good, those are the expenses incurred to sell the good. That's why they are added to cost of sale. We should not treat it as an expense. Like expenses which we have to show below the line. So it should be considered as part of cost of sale. Carriage output. The cost of delivering goods to a customer is carriage output and is debited as an overhead. Okay. It is debited as an overhead. Double check the treatment of carriage inwards and carriage outwards. So carriage inward will be reflected in cost of goods sold and carriage outward will be reflected in overhead expenses. Wages treated as a cost of sales. Goods purchased may not be in a suitable condition for selling to customers. Sometimes what happens, they may buy the goods and they may do some work on it. So further work may be required to them before they are sold. So maybe some rectifications will be there, some final touches will be there. Some work is pending. So on that you may spend some money. So the wages paid to employees for performing this work, which work? The additional work on the goods. Okay, so this one should be debited as part of cost of sale. So those particular part, that particular part of expenses, the cost which are incurred to improve the products, they should be treated as part of cost of sale. Gross profit. The gross profit is the profit earned on selling goods before any other expenses are taken into account. So sales minus sales returns will give you net sales or net revenue. So to that you have to, from that you have to subtract all cost of goods sold. So what is cost of goods sold? Cost of goods sold is nothing but opening inventory. To that we add purchases less purchase return. So to that we add carriage inwards, and from that again we subtract everything. So what we get is cost of goods sold. So what we have to do? From that, once from net revenue, we have to take out cost of goods sold. Then what we get is profit. So gross profit. So what is gross profit? Gross profit is the profit earned on selling goods. Okay, the profit earned on selling goods before any other expenses are taken. When there is no trading account, there is no trading, there is no gross profit. Okay. Some cases you may be asked to prepare a statement, income statement, where they will not give any opening inventory, closing inventory, even the purchases will not be there, sales will not be there. For example, in case of service industry, service people who are running services, service business, they may not have any inventory. So then in that case, gross profit, the question of gross profit doesn't exist. The words cost of sales and gross profit are important and should always be shown. Okay, so never miss out. In a hurry, what most of the students they do, they forget to write cost of sales as a heading. They forget to write gross profit. So that should be avoided. So you should be very careful. So you have to write it. So the words cost of sales and gross profit are important and should always be shown. Should means it is mandatory. Always include the words cost of sales and gross profit in full. So avoid using short forms. So you cannot write COS, GP or something like that. So you should not use short forms. You have to use full form. You have to use full words. Include the words, full word. Okay. So you cannot use the short forms. Any other income. You should add any other income to gross profit. So suppose you have got other than sales, if you have got any other income, you have to add it to the gross profit. Never treat it as a negative expense. Negative expense means deducting from expense. Never do that. So it should not show you the negative expense. The expenses column. You have to just add it to gross expense. So because that is also income, but it is not from trading, it is other income. So that's why it should be added to gross overhead expenses. So we have to after you add up other expenses, there are overhead expenses which you have to uh, you have to show. So there is no particular order in which overhead should be shown in the income statement of so but it is often best to place the larger amounts before the small. So there is no particular order. This is not mandatory that you have to show it in particular order. But it is often best, it is a practice, best practice to place the larger amount before the small. So that you show the bigger amount and then you show the small amount. It is also a good plan to group together similar kinds of expenses. For example, property expenses, rent, heating and lighting and insurance. So you can club up the similar type of expenses and you can show there is no such prohibition that you have to. And it is not compulsory. So this is what is it is an option. So it is better if you do it. So the examiner will be impressed. Profit for the year. Yes, the profit for the year is very important. You will need to use it when you prepare the next one, the statement of financial position. So profit for the year, you have to show. The profit for the year is important. You have to show after the end result is profit for the year. You need to use it again when you prepare the next document. So the next the chapter after this is the statement of financial position. There you will use it. The net profit whatever is done. Other chapters where income statement is prepared. See, income statement is very important. So it's very important in the sense that again when you study accruals and prepayments, this is another lesson. So another chapter, the matching concept. So in this also, if we incorporating this, you have to prepare income statement. So again there is one more chapter, provision for depreciation of non-current assets. Again, there also you have to incorporate the depreciation and you have to prepare income statement. Irreversible and doubtful debts. Again there is another lesson, another chapter called irreversible and doubtful debts. There also you have to incorporate these things and you have to prepare income statement. So this is the income statement is the base. So to that you have to make lot of other adjustments. So incomplete reports. Even in case of incomplete reports, you may be required to prepare income statement. Not for profit organization. See, not for profit organization means clubs and societies. So there may be a bar or cafe or something. So they may be doing some sort of business. They will buy some inventory, they will sell something. So all those things. So even there you need to prepare income statement and you have to show it as income. There also you need to. So it is very important lesson. So very important. So but this is the base. And you have to learn all this as a comprehensive. So that is where a lot of students commit mistake. So you have to be very careful. You have to be very attentive. You learn each and every aspect. Learn every lesson carefully. Learn every chapter carefully. Work out all the problems before attempting the main examination question. You have to be double sure. You have to be thorough in these particular aspects. Income statement is prepared in different forms. See, there are partnership accounts. There also you have to prepare income statement, but the profit is shared between the partners. So that is one difference. And attribution to the accounts of limited company. There also you have to prepare income statement, but the format is entirely different. The form is entirely different. Manufacturing accounts. Where manufacturing accounts, there are so many other aspects. There are lot of details given about manufacturing entity. So there also you have to show a lot of other aspects, and there also you have to prepare income statement. So income statement is overall, it's very important, and lot of questions are asked from income statement. So you have to be, it's very important. Income statement of services. See, people who sell their services such as accountants, lawyers, they require income statement. So they don't need trading account. So that is there is no question of preparing finding out gross because there is no trading. So if the business is a service business, one which does not pay us the book, then there will be no cost of sale. Because there is no cost of sale. You will need to show the income which will be the fees received less the expenses to leave profit for the expense. It's very simple. Okay, so keep these points in mind. This is very, very important. So then, in the next lesson, we will start with working out the problems. Okay. So we have time. Coming to income statement for sole trader, the following trial balance has been extracted from annual reserve as a 31st December 2016. So this is extract from David Hopkins. The following trial balance has been extracted from annual reserve as a 31st December 2016. Plant and machinery 25,000, office furniture 20,000, and first Jan 11,000, trade receivables 4,140, trade credit 1,022, bank 3,327, loan receivable 4,000, sales 72,100, purchases 28,540, sales return 1,600, purchase return 142, wages 3,100, rent 4,000, heating and lighting 5,120, advertising 2,400, other operating expenses 2,010, loan interest to the 250, drawings 4,840. Capital 20,000, inventory at 31st December 2016 cost 9,000. Prepare average income statement for the year 31st December 2016. Income statement for the year 31st December 2016. So we have to prepare income statement. So based on this information. So it is average income statement. So for the So I think it's very important. So we are very particular and others, and date is also very important. So name of the trader also income. I think income statement for the year. So what are the five steps? First we have to record sales and sales return. So sales minus sales return. So first step, sales minus sales. So what are the sales and what are the sales return? Sales are 72,800, 60, 72,800. So it will be 71,000. So now less cost of goods sold, cost of sales, cost of sales. So in this, what will be there? So by default, first one is inventory as a first Jan. Inventory as first Jan. So how much? 11,000. So first Jan 2015, 11,000. purchases from the purchases are 28,540. Then purchase returns are 2144. So what is the purchase? So carriage amount is there? No, carriage amount is not there. So purchase is lower, purchase is lower. So inventory 31st December is 9,000. Inventory 31st December. So even that we have to subtract. So if we add this, so it is 11,000 plus 28,540 minus 2144 3739. So minus inventory as it at 31st December 2019. So 37,396 minus 9,000, 28,000, 3. So this minus this will give you gross profit. So what is the gross profit? 42,000. So this is the gross profit. So to this we have to add other income. So let us see if there is any other income is there. So okay, so there is no, so other income will not come. So if you want, you can just write a new plan and other income. So when you are learning, you can just write so that you don't forget in the exams. So you can show that again you have to scratch and again you have to go, that gives you a lot of visual power. That's why it's better you make a practice of writing this and you write it as zero because there is no other income. So now let's overhead. What are the overhead expenses? So let us see. Wages, rent, heating and lighting, advertising. Wages, rent, heating and lighting, advertising. Wages, so wages is 3100, 4,000, 3100, 4,000. Other operating expenses 2010. Loan interest. So for ClickUp, 5100 plus 4000 plus 5020 plus 2400 plus 2000 plus 50 is equal to 16,000. 16,000. So these are all overhead. So minus 42,854. So 25,924. So what is this? This is nothing but profit or what? Okay. So this is how you. So very simple. This was very simple question, very simple topic. But going forward, you will have a lot of adjustments there too. The problem will not be simple. But if you remember the steps, you can just uh, increase the learning speed. So incremental learning. So you can learn, add more concepts into that. So prepare hardly income schedule for there. Keep your answer, it will be needed again in chapter 8. So the answer you need, so answer whatever you got is required because next lesson is statement of financial position. So in statement of financial position, we need to add the profit whatever we have. So profit whatever we have got, we need to add. So that's why that's very much important. So in the balance sheet we have to report. So that's why it is next one. Let us see. This is finished. We have completed one question. So that's the game question. So the trial balance extracted from the Borough at 31st March 2016 as follows. Sales 24,000. Sales return 3,600. Purchases 1,20,000. 120,000. Purchase return 4,400. Purchase return 4,400. Inventory 18,000. Carriage invoice 5,000. Carriage output 3,724. Discount received. This is other income 3,060. Discount allowance 5,040. Wages 36,800. Rent 8,000. Heating and lighting 6,450. Other operating expenses 1,143. Fixture and fittings 9,000. Office furniture 2,000. Inventory 2,039. 2,030. Land value 2,496. 2,496. Bonds 20,037. Capital 30,000. So during the Tekla has taken goods for costing 2,000 for his own use. So this will come as a deduction from cost of goods sold. These are not been recorded in the books of books. Inventory at 31st December 2016 cost 20,000. Prepare the columns income statement for the effect 31st March 2016. Keep your answer. It will be I needed again in chapter 8. So hopefully I think you can do this column on your own. So if possible, take the screenshot of this question. Take the screenshot of this question and put effort. Try to do it on your own. And if you don't get this, please let me know in the comment. I will do it. We will do it in the class. So Otherwise, it will be assumed that you have understood, then you have got, you have completed. So then we proceed to the next part. So I will give some time. Just take a screenshot of this question. So next class we will do exam practice question. So please let me know if we have any doubt in this question as a comment. So we will have separate class, or I will just explain to you whatever doubts you have. So till then, bye bye. I good day. Good night. So dear friends, welcome back. Welcome back to Shakshat virtual classroom. So today we will discuss the exam practice question from income statement. So this is income statement. These are the questions from income statement. So we will discuss similar questions might have come or expected to come in AS level question papers. So let's discuss this question paper. So what you can do is you can take the screenshot of this, take a picture or try to answer yourself. So then you can continue and just check whether everything has been done correctly or not. So which of the following does not appear in an income statement? So which does not appear? Carriage in outward expense will appear, carriage in allowed, discount allowed will appear, discount usage will appear. So motor vehicles will not appear. So motor vehicles is an asset, so this will not appear. So the following information has been expected from the trial balance of business. Sales 1 lakh, purchases sales 100,000, purchases 60,000, wages 21,000. Closing inventory was 3,000, more than opening. Okay. Closing inventory was 3,000 more than opening. So 1/3 of the wages was charged to cost of sales. 1/3 of this, 21,000. So, a cost of sales in the trading section of income statement. What was the gross profit? So, they are given field. So, let us do. So, this is just working. So, we can do here. We don't have to follow the rules like cost of sales or anything. So, this is just to calculate. So, if you want, you can calculate cost of sales. So opening inventory minus closing inventory is 3,000. It is more, right? So first is opening inventory. So we don't know. So we'll keep it in pending. So purchases 2,000. Wages 7,000 to go in trading account. So that is cost of sales. So wages. So then what to do here? Opening stock is not given, closing stock is not given, but difference is given. So if you recollect, opening stock, opening inventory will be added, and closing inventory will be subtracted. So since the closing inventory is more, so we have to subtract the closing inventory. So closing inventory. So please don't get confused. The concept is not here. So just know this cost of sales is the figure. 3 purchases less purchase income plus wages minus closing. Okay, so purchases is given, purchase returns are not there, so wages is given. So then opening inventory they are not given, closing inventory was 3,000 more, so that's why we are okay. So since we have to subtract, since it is more, so this is positive, this is negative, so play up and plus minus, so whichever is greater, this is greater, so that's why that is greater. So it is 2,000 minus 3,000 is 64. 54,000 is cost of goods. So therefore the cost of goods is 36. Okay. So next. The carriage invoice of business amounted to 6,000 and the carriage outward was 7,000. The carriage outward was charged in trading account. So this is a mistake, so it cannot come in trading account. Not come in trading account. Of the income statement in error, and the carriage outward was debited in the income statement. Or carriage outward was debited in the income statement. Okay, so what is the carriage? Carriage outward is 6,000. Carriage outward is 7,000. The carriage outward was charged to trading section in the income statement and the error. So what has happened? Cost of sales difference. The third one, the carriage inward of the business amounted to $6,000 and the carriage output was 7,000. The carriage output was charged in trading section of the income statement in error and the carriage inward was debited in the income statement. What has been the effect of this? Of these errors? So the carriage inward. Okay, see here. The carriage inward. 6,000. Carriage output is 7,000. So what is the rule? The rule is carriage inward should be considered as part of trading system. So that is the part of cost of sales. But here what has happened? The carriage output was charged in trading section. They should not come. Carriage output was charged in trading section. So carriage output was how much? Carriage output is 7,000. So this is 1,000 more. So what has happened? So if it is 1,000 more, then gross profit will be understated or overstated. So I want you to be clear in this. So see whether it is carriage inward or outward, there won't be any effect. So for the profit for there won't be any effect. So this is correct and this is correct. But we have to see among this which one is correct. So don't try to answer the question with the trial and error method. So try to understand the question. So work out, take some minutes. So it's small time, a bit of time. So just to understand the point. This one. So third one. So let's assume sales. Let's assume revenue as assume purchases as 40,000. So now, what you have to do? Carriage inward is 6,000. Okay, carriage inward is 6,000. So this is the actual treatment. So what should be the profit? So 90 minus 46 is, so 90 minus 40 is 50, 50 minus 44, 44,000. The gross profit should be 44,000 if the actual treatment is done. Now, this is the correct one. The correct. So now the wrong. So what has happened? So revenue is 90,000 itself. Cost of sales purchases is also 40,000. But what they have done? Carriage inward. Instead of taking carriage inward, they have taken carriage outward. Carriage outward they have taken the 7. So what has happened? So this is carriage outward. So 90 minus 40 is 50, 50 minus 7 is 40. The gross profit is showing more or less because of the wrong amount. Gross profit is showing less because of the wrong treatment. The gross profit is understated. Gross profit is understated by 1,000. Okay, this is how you have to confirm yourself. See what happens, most of the students, because of hurry in the examination, they hurry, and because of this they commit mistakes. So they try to answer it in a trial and error way, and easily they will do it. So never do that. So hardly it will take 1 minute to confirm yourself. So it is understated. So the correct answer is understated the 1. So now we are double sure. So we have checked the figures and we have this is the answer. So this is how we have to do this type of problems when there is a bit of confusion. So you have to confirm yourself whatever you are doing is right or wrong. So next one. So what I suggest you is always when you are doing the MCQs and whenever exercises are given, always you have to try solving on your own. Just see the question. Try stop the class. Stop the video. Pause the video. Just try to work out the answer on your own, and then you compare with the actual solution, so that you are then only the learning will be more effective. Otherwise, the learning will not be effective, and ultimate result will not. You will not get the ultimate result. Okay, so never do that. So please follow my instruction, so that the process should be served. Don't waste time unnecessarily by trial and error methods. Okay. So now come to the next one. So let us see this one. Discount received amount to 10,500. Okay, discount received 10,500. Discount allowed 13,000. So the discount received has been debited. Discount received have been debited. So what we have to do? Discount received should be credited, right? But they have been debited. Okay, and the discounts allowed have been credited. Discounts allowed should be debited because it's in loss. It's an expense. So it should be debited. So this is wrong. This statement is wrong. This statement is wrong. Okay, in the income statement, what has been the effect of errors on the profit for the year? So O is understated, overstated, understated, overstated. So don't try to answer this the hanky-panky way. So let us see. Let us assume, and we will do the balance. So then the concept will be clear. So fourth one. So fourth. So profit before discount. Okay. This is the correct profit before discount. 10,000, 40,000 in both the cases. Then we will do the actual treatment. Okay, so we will do the actual treatment. So we will deduct discount allowed. Because discount allowed should be deducted right from the profit because it is an expense, so it should deduct. So what is discount allowed? Discount allowed is 13,000. Discount allowed is 13,000. So what we have to do with the discount received? Discount received we have to add because it is their income. Discount received we have to add because it is an income. What is the discount received? The discount received is 10,500. So this should be subtracted and this should be added. So what will be the net profit? So what should be the net profit? 37,500. See, this is just assumption. Okay, so we are assuming that this is the profit before discount. So this type of columns we have to do this way so that the understanding is clear, so that we are sure what has happened and what is the effect, net effect. Otherwise, don't try to do some wrong methods, wrong calculations, and try to ultimately. So whatever method you do, ultimately you have to get the correct answer. So that is what it is. So what has been done? They have actually this is the right one. So this is the right one, and this is the wrong one. So what has happened? Wrong one what they have done? They have deducted 10,500 and they have added 13,000. So then what will be the profit in this case because of the wrong profit? 40,000 minus 10,500 plus 13,000. The profit will be 42,000. So it is more. The profit is more. Okay. So it is overstated. It is overstated. Overstated. By how much? 42,500 minus 37,500 is 5,000. It is overstated by 5,000. See, the concept we are double sure now. It is double sure. It is certain. There is no hinky panky like you are not trying to guess and write the answer. Never do that. Never do that. Okay, so never do that. So the answer is overstated by 5,000. Overstated by 5,000. Okay, so this is how you have to do. What a lot of the students do because of hurry, because of the exam stress, they will just try to guess and they will ultimately put either of this one and ultimately they will lose marks. What is the purpose? The entire year you will have put efforts and because of some small mistake you will lose marks. So please don't do that. So please be careful. So please learn the ways and methods how to actually get the answer. Now, carriage inwards in a trial balance is to 2,300. Carriage inward in a trial balance is 2,300. It has been entered in trading section of the income statement. Again, trading section has 32. In addition, motor expenses of 600 has been posted to the motor van account. What effect has this on the income statement? So again, we'll not just do it, we'll not just try to do blindly, we'll just try to analyze by understanding the question carefully. So we'll just do it again here. So again, income statement. So let's assume profit before these frequencies again 90,000. This is right. what has been done? Carriage mode in a trial balance is 2300. Carriage mode is 2300. But it is the training section of income statement of 32. Wrong thing. What we have done? We have taken this. Then next one. Motor expenses of 600 has been posted to the motor van account. So motor expense is a expense. So it should go to reduce the profit. So motor expenses 600. But what they have done? Motor expenses have been posted to the motor van account. It has gone to motor van account, means it has not been shown in income statement. So it has not been shown in income statement. So now let us see. So what is the right thing? After I should do the right one. So it will be 90,000 minus 2900. 87,100. So 90,000 minus 3,400. 86,800. So the profit is understated. So what has happened? The profit is understated. It is understated. It is less, no? So it should be more. The profit should be more. But the profit is less. The profit is understated. What is the profit? It is understated. Understated by how much? 87,100. This one is 3. Understated by 3. Understated by gross profit. So the profit, okay? So this one. This is overstated by 3. Or understated by 300. Understated by 300. And even gross profit also will be understated by 900. See, gross profit is also understated by here. Gross profit is okay. So we need to find even gross profit also. So minus 10. So we just do it again once again. So please bear with me. So so this is just to find out the gross profit. Okay. So let's carriage amount is 23. And this is it has been shown as 32. So this is just to find gross profit. So what is minus 2300 is 87,700. So then 90,000 minus 32, 86,800. So gross profit. So actually gross profit is still more. Here it is showing less. So it is understated again. Understated. Understated by how much? Minus 87,700. Let's get the 900. Which one is correct? Which one? So please repeat double check. So don't try to guess. Don't try to do the problem without understanding. Never do that. Okay, please never do any problem without understanding. Have a clear cut understanding of the concept and please do it. So that each and every mark is very, very important. So please do it. Use my classes very carefully. So please share and subscribe. Let others also grow. So let others also get help from this. So be generous. So we'll catch up in the next class. Basically, I will be starting the next one that is statement of financial position in the next class. Till then, have a good day. Good night. Goodbye. Hello, dear students. Welcome to Shanta Virtual Classroom. So today we will do the recap of whatever we have learned till now. So basically this is a recap session. So in this lesson we will discuss what all we have done till now. So the first lesson was cash transaction. So in this lesson we learned how to record cash transaction when payments are made and amounts are received. When amounts are received in so that is what is cash transaction. Cash transaction and money is received from someone. So how to pass those entries? So that's all we have done. So here in this we have learned all about personal transactions, like when we receive money from accounts, personal accounts, how to record them. So when someone gives money and someone receives money, how to record it. And we have even learned how to record expenses, how to record when payment is being made or received. So all these things we have learned in cash transaction. In lesson number 2, we learned credit transactions. So what are credit transactions? Credit transactions are those where amounts are not paid, where amounts are not paid, or not paid. So or not. So that is why it's called credit transaction. The payment is not made instantly, or amount is also not received instantly. So again, how to record when amount is not received, and again when there is a transaction with personal account, when there is a transaction with expense account, income account, and all other stuff. So we have learned in credit transaction. How to record credit transaction? We have learned in second lesson. So we have done couple of questions. So here also we have done couple of questions. In this also we have done couple of questions. We have discussed a couple of questions. Please go through that. And then again, third, we have learned books of payment. We have learned about books of payment. So what are the books of payment? Sales journal, sales journal, purchase journal, sales return journal, purchase return journal, general journal or just journal. Okay, so what is recorded in sales journal? All particularly all details of sales, particularly credit sales, are entered in sales journal. Purchase journal, all credit purchases are recorded. Sales return journal returns when customer returns the goods, then whatever entries made, so that is made in sales return journal. Purchase return journal, we record the purchases, we reject the material and when it is given back. So that is what is purchase return journal. So that is written in purchase return journal. So in cash book we record amounts received and paid, whether cash or check. Okay. So cash or, and even discount column also we have done. Discount column, how to write discount. So we have done how to record entries in sales journal, purchase journal, sales return journal, purchase sales return journal, purchase return journal, cash book, general journal or journal. So what will be entered in general journal? Adjustment entries like outstanding expenses, prepaid expenses. So purchase of non-current assets, like purchase of machinery, purchase of how to rectify anything. So for a non-current asset, entries related to non-current asset, rectification entries. So basically, what are things doesn't come, what doesn't come in sales journal, purchase journal, sales return journal, purchase return journal, cash book. So that will be reflected in general journal or journal. So that is how it is. So we have done how to write these and all. So then how to post it to the ledger also we have done. How to post to ledger. And again we have done division of classification of accounts, division or classification of ledger accounts. Ledgers also we have done. And so in ledger we have done how to post, how to prepare. All these things we have learned in ledger account. So then division or classification of ledger. So what is the how many different classifications there? All these things we have learned. And we have learned balancing of ledger account. Balancing of ledger account. So that is how to do the balancing of ledger account. And we have done a comprehensive problem also. Comprehensive problem to cover up all these aspects, and we have prepared, ultimately we have prepared trial balance. So how to prepare trial balance? Prepare trial balance. What is trial balance? How to prepare trial balance? The format of trial balance, the procedure, the structure or the design of trial balance. All these things we have learned. All this, whatever is there, whatever we have learned, all this is known as bookkeeping. So all this is known as bookkeeping. So till the preparation of trial balance, the work is done by bookkeeper or clerk. So after this, the next step starts. So the next step is known as financial accounting. So the accountant does the financial accounting job. So he starts with financial accounting. So next lesson. So here onwards we will be doing financial accounting lessons, like how to prepare income statement, how to prepare balance sheet, what are the differences. So the main account here till here was all basic but very very important for you to get understanding of accountancy. So now from the next lesson onwards we will start financial accounting. Till then, bye bye. Dear friends, welcome to Shasha's virtual classroom. So today we will be discussing books of prime entry. Prime means first initially. So as soon as the transaction happens, we record in some place. So what are the different types of transactions we have? So we sell goods, so they are known as sales. And when goods are returned, the, when sold goods are returned, they are known as sales return. We purchase goods, which is known as purchases. If the goods are not of good quality, we return the goods, purchase return. Business even receives and pays cash, even that is recorded. So apart from that, there are a lot of other things which are there. So when they happen initially, as soon as they happen, we record at one place one books, certain books, okay, certain books, certain books. So we don't write in haphazard way, we write in certain books. All sales, we record in sales daybook or sales register or sales book is also known as sales. Similarly, some customers may return the goods, so we record them in sales return register. So when purchases are made, all the purchases are recorded in purchase register. Similarly, the goods are not of good quality, we may return the goods, so they are recorded in purchase return register. So when amounts are received and paid, receives and pays, when business receives and pays, so it is recorded. So they are recorded in cash. So summary of receipts and payments, whether cash and bank is if you receive by check. So all those will be recorded in cash. So a lot of other entries like purchase of non-current assets. Because purchase of non-current assets are not purchases, right? So it's not done. So purchase of non-current assets. Just put this. All these entries are recorded in a book called General Journal. So we have to write the specific transactions in specific book itself. We cannot mess up. So the entries cannot be messed up. Okay, so this is the fundamental. So in this lesson, we will learn how to record the entries in the books of prime. So how will the books of prime entry? So you can see the books of prime entry will be like this. So the dates will be there, particulars will be there. So date means date, particulars means parties will be there from whom to whom we have sold. So obviously customers, name, date will be there, customers will be there, So everything will be entered in sales return. So sales return journal again, customers name will be recorded. So again date, particulars, so particulars, customers and amount also. Similarly, purchases journal, we record suppliers name. Suppliers name and details of what is the amount of transaction. So again purchase return journal also we record suppliers. So obviously we there all those things we will mention. So this is how the entries we have to enter. So in this specific format, specific how do we say order itself. So we have to write specifically. So this is a list. Actually, these are the list: sales journal, sales return journal, purchase return journal, and purchase journal. These are all lists. Okay, so these are all lists. Lists of list of sales, list of sales return, list of sales purchases, list of purchase return. So everything will be there. So from here, once we write here, so what happens next? So sales. What happens? There are two things. One is sales and one is customers. Customers ledger. So sales, what we have to do is we have to add on this whatever the amounts we have to enter in sales count. We have to enter in sales. Sales account. So sales journal is different. Sales account is different. Very different. Similarly, sales return journal, whatever the total amount we have to enter in sales returns account. Total. Sales account. Total amount. Recording sales returns. So that. So purchases. So purchases, total purchases will be entered in purchases account. So purchases account. So again here is total amount. We entered in purchase returns. So this total will be. So the supplier's names. So the details of suppose this is Mr. A, Mr. B, Mr. C. It will be posted to the respective ledger accounts. Because here transfer, you have to make the entries, corresponding entries in Z's ledger account, Y's ledger account, X's ledger account, B's ledger account, respectively. So separately we have to record. Total of sales, we have to record the sales account. Only one. So aggregate. So aggregate will be recorded in. So no individual. Okay. Not record individual entries. Again in sales account. The total of sales journal will be recorded in sales account, whereas customers accounts will be independently recorded in the customers respective customers. The same rule applies for even for sales returns purchases. So remember, sales journal is different, sales account is different, and total amount of sales or sales return purchases return only total is recorded in either sales account or sales returns account or purchases account or purchase returns account. Aggregate will be recorded and individual entries will be posted to individual account. So then sales register, sales. So remember this is very important part. So often asked in MCQs, so you have to be very clear. So then similarly, sales register, sales return register also sales return. So both are. So then cal. So we have discussed the sales register, sales return register, purchase register, purchase receipt register. So when we receive and pay, we record in cash book. Cash and bank columns. So cash book. So the format is cash book we have to record in this. So cash book will be divided is usually divided into two parts. So debit part and credit part. So in debit part date particulars from whom the cash is received, folio, folio number, discount. So there is a column for discount also. So when we receive money, we may allow some discount. So that discount will be recorded here. When we receive cash, we record here. When we receive checks, we record it. Similarly, date, particulars, folio, discount. So when we make a payment, we receive some discount. So we record the discount here. When we pay the cash, we record here. If we pay the check, we write it in bank column. So very important this particular format. So very important question. So often asked in AS level exams. IGCSE also this question is often asked. So cash book very easy marks. So just you have to remember the format and just plug in the figures. So very simple, very easy. But format is very important. Right? This in this particular way. So it's very important. So format oriented. So format is very strictly on the follow the format. Then last, general or general problem adjustment. So journal. So the format of journal is like this: date, purchase, and so whatever is the whatever is. So this is also from here we just write it as a for reference. From here we are recording for respective ledger accounts and cash book also we record the entries and from here we post it to respective ledger. So remember this. So it's a very simple chapter. It's a simple lesson and but basically to understand accounts you have to do all this. You have to understand all this, otherwise understanding will be incomplete. So we'll wind up. Next class we'll work out one problem based on this. So we'll work out one practice exercise based on this. So one or two questions will be more than sufficient because we just need to know how to record it and how to do it. So until then, bye bye. then they are called personal accounts. So either we receive from them or we pay, or the business will either receive or pay or give to the other business. So the rule is debit the account that receives or debit the receiver, debit the receiver. So some authors they write this way. So debit the account that receives or debit the receiver, like David Hopkins account they use the first rule, that is debit the account that receives, they write it that way. So some other authors they write debit the receiver. Similarly for credit the items, they write credit the account that gives or credit the giver. So some authors write that one way or the other. So the rule is ultimately the same. I mean, the concept is ultimately the same. Real account debit what is being received. So in case of real account, when we receive or pay something, when business receives or pays something, so then debit what is being received or debit what comes in. So credit what is being given away or credit what goes away. So this is a rule for real amounts. So you know what is real amounts? So when we deal with cash or bank accounts. So nominal account, the rule is debit all expenses and losses, credit all incomes and losses. So nominal accounts are expenses and incomes. So it's like the accounting equation. So when we are recording accounting equation from the accounting point of view, when we see from accounting equation point of view, assets normally have debit balances, liabilities and capital normally have credit balances. So remember, assets and expenses normally are debit balances. Okay, so liabilities and incomes are normally credit balances. So even if you know, it is noteworthy that capital is also a liability. So it means capital, liabilities and incomes are normally credit balances. Okay, remember, I'm a trainer, not a tutor. I succeed to clear your exams, to get better marks, to excel in your studies, so that you understand and do better, better and better and best, the best. It's okay. I've been taking on classes. I'm aware of difficulties faced by various students, below average, above average. I analyze and understand what they don't really understand and how the students suffer. I feel their pulse and try to understand their difficulties, making the student understand the subject and making interesting for them to learn so that they excel in their studies is my core perspective. These days, a lot of students have various difficulties. They won't understand anything in the class. A lot of students who are pursuing online classes. A lot of students who are taken up distance learning classes face various difficulties in understanding the core concepts. So they try to understand, but most of the teachers uh, have different methodologies to explain, and few students are unable to understand. It's a hard time for the students. Myself, not being just learned, but having understood the subject as a common sense. I'm a professional tutor, professional trainer, and educator, having on-job experience and theoretical knowledge in various subjects, such as direct taxes, indirect taxes, accounting, be it financial accounting, advanced financial accounting, cost accounting, advanced cost accounting, managerial accounting, advanced managerial accounting, management accounting, advanced management accounting, financial management, operations research, quantitative techniques, business mathematics, business statistics, business economics, business studies, and various other business management subjects. I even have on-hand experience in ERP, SAP, Tally, QuickBooks, and all. So I'm in a better position to explain the real logistical issues, the logistical problems, the core concepts in a better way. So a lot of students approach me near the exams for exam oriented for crash courses and exam oriented coaching so that they pass their exams. I have a record 100% of my students clear my exams, clear their exams with ease. 100% they succeed. So I explain them as if they are novice, ignorant novice. Even the ignorant novice understands the subject easily. So I teach them as a common sense because any subject is more a common sense than a subject. So understand should a student should be capable of understanding the concepts so as to make their life easier. So learning becomes pleasure and enjoy. So anyone who is interested, who wants to clear their exams with ease, without any difficulties, please get in touch with me. I am available anytime for them. 24/7, I am available for them. Thank you. Caring is caring. So please subscribe, share to my channel because spreading knowledge only increases your knowledge. So dear friends, welcome back. Let us continue with activity 7.2. So Vikram is a sole trader who buys and sells goods, the trial balance. So this is a question from statement of profit or loss. So we need to prepare a statement of profit or loss. This is David Hopkins' latest book. So I have for 2025-26. So we'll continue. Okay. So let us just so check out the items whatever are there. So before starting this, so let's have a recap of how statement of profit or loss is prepared. So first, what are the line items? So statement heading, always we have to write the heading. So always, but sometimes it is given in the question paper itself. So anyways, we will just write down statement of profit or loss, whatever the trader's name and the period and all, or whatever. So what are the line items? So first one it is revenue. So revenue is nothing but sales minus sales returns. So minus cost of sales. So cost of sales. So you know what is cost of sales? So opening inventory plus purchases minus purchase returns plus carriage inwards minus closing inventory. So that will give cost of sales. So when we subtract revenue, cost of sales from revenue, we get gross profit. To that gross profit, we add other income. So other income is like discount received, interest received, so rent receivable. So all other income which is not other than operating income will come here. So from that we subtract expenses. What are the expenses? Like expenses incurred, which are like salaries, wages, rent, postage and telephone, all those expenses are taken out. So that will give profit or loss. So in just 5 steps, so very important. So learn this because often the questions are asked in AS level. Lot of questions are asked on income statements. So that's why we have been repeating this concept again and again. Like what are the steps and what are the contents? So it's very important. now let us just have a look at the question. So carriage inwards. So this is forming cost of sales. This is forming part of cost of sales. So carriage outwards is expenses. So discount allowed is also expense. Discount received is other income. Heat and light expenses. Insurance expenses. Inventory at 1st April 2019. So this is cost of sales. Motor expenses. Purchases cost of sales. Purchase returns cost of sales. We have to subtract. So rent and rates expenses. Sales revenue. Sales returns revenue. Wages and salaries expenses. So inventory at 31st March was valued at 29,143. So this is also cost of sales. So this is how we have to do. Okay. So first, as soon as you see the question, you should visualize where these items will come. So you should visualize where these items will come, so that when you are doing the problem, you should be doing it like a bullet train. So very fast. You should be very fast, because the questions will be very tricky sometimes. They will be very somewhat lengthy. If not one question, some other questions may be very tricky. So that's why you have to be very active. Okay, hyperactive. Otherwise, getting very good grades is not at all possible. Okay, so that is remember this. It's very very important. So now let us continue to so what is there? First, revenue. There are two items. So sales and sales returns. So that is what is in revenue. And sales returns. So how much it is? Sales and sales returns is 354,987. Three nine eight five. So you need to write this. What is so it is sales. So this is sales returns. So that will give you 354. Three five one zero zero two. Okay. So okay. So let us do it in a proper way, so that I don't want you to follow the same thing when you are writing. So let me just write it again in a proper format. So see, accounting as a subject is a presentation, more concerned about presentation. So all the steps should be as it is. All the steps should be very formal, very neat and clean, so that each and every concept is explained to the examiner. So first of all, we have tried writing statement of profit or loss. So in the exams they would have given this actually. So it is not so important. Even then, if they are not given, so I am just writing here for your convenience. So if it is written, you don't have to write it. So first we have to start with revenue. So revenue, under revenue, we'll have sales minus sales return. always write the dollars currency in always you have to write, don't forget to write this. So revenue. So on the top if you write it is applicable for all, so you don't have to write everywhere again. So minus cost of sales. So what all is coming in cost of sales? Purchases. So below that you need to write opening inventory. Okay, don't forget to write opening inventory. Follow, understand, remember, by heart, whatever. So always you have to write it in a proper sequence. Okay, so always. So inventory, what they are given here, inventory at 1st April 2019. Inventory at 1st April 2019. Write the same line item, whatever they have written. See, what I advise you is, as soon as you see the question, you can try answering the question on your own, and then you can cross check with the solution here, so that you can answer. You can be sure that whatever you have done is right, so that it will increase your confidence. It will boost your confidence, and it will help you prepare for examination with lot of comforts. Okay, so first you try on your own, then only you check this. Don't see this as a movie or as a video or something like that. So please try to work out the question on your own, and then you have to have a look at this. This will be more effective. So learning should be more effective. So it should be with fun also, but it should be more effective as well. So try to answer the question on your own, and then you cross check with this solution whether it concept everything is clear or not. Okay, so inventory at 1st April 2019 34096. 34096. Okay, then purchases. To that we need to add purchases. What are the purchases? Purchases 245110. So from this we need to subtract purchase returns. What is the purchase returns? Purchase returns are exactly reverse of purchases. So 5620. So to this we need to add carriage inwards. Because when we purchase, we get the goods inside. So by default, carriage inwards to 305. Normally these are the line items normally. Okay, purchases minus purchase returns, carriage inwards. So from that we need to subtract inventory on 31st March. Inventory on 31st March 2020. So it's given in adjustments. Always closing inventory is given in adjustments 2914. Always. So put it in bracket so that you don't mess up again. Lot of students they mess up doing calculations. If they don't, if you don't put the numbers minus or something like this, you will just make wrong calculations, and ultimately the figure will go wrong. So you lose marks. So very important, 34096 plus 24510 minus 56250 plus 2305 minus 2914. 246748. So the expenses total amount is 246748. minus is for these items. Okay, so don't get confused again. So 104254. 104. 54. So this is, what do we call this? This is gross profit. Correct? So gross profit. So this is gross profit. Okay. So this is gross profit. So this is how it is. So to this we need to add other income. So this is a comprehensive question. So all items have again, this is a very good question for practice. Okay. So this is very good question for practice. Try to practice this to learn the line items. So that all the line items are included in this. So it will be easier for you. So you kindly mark it as important and practice these questions. Often you practice this at least 3 to 4 times you practice, so that the concept is clear and you so that you don't miss out any line item. So yes, obviously there will be adjustments, lot of adjustments also will be there. So that is another part, but this is the starting point. So always you have to start with this, then you have to incorporate the adjustments, whatever. So the format will be the same. So only you have to incorporate the adjustments. Okay. So practice this question. This is very good question because lot of discount allowed. So exhaustive line items are there. So discount received. So this is other income. So this is other income. Discount received. 2067. Discount received. So you add this. So this will give you one amount. So we don't know the name of that amount. 067106321. So from this we need to take out expenses. So what are the expenses? Carriage outward 1, 2, 3, 4. Discount allowed 1,888. Heat and light 3765. Insurance 4760. Motor expenses 5269. Rent and rates 14,400. So that's all. So these are the expenses. Okay. So these are the only expenses, nothing else. So how many line items are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Let us just check if you have taken everything. So 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 12, 13, 14. 14 line items. Is it correct? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So what we have left? 18 things. I did not carry the full discount allowed. Discounted rate allowed. 10 line. More responses. So let us cross check. So let us check line by line item. So how to cross check? Sales. Yes. Is written. Is written. So you need to learn even how to cross check sometimes. Okay. So we have to cross check. Otherwise, simply just for a matter of 1 minute, you will lose a lot of marks. Even 1 mark is very is of high importance. So don't be in a hurry. Don't try to mess up. So wages and salaries we have taken 67109. Then let us just wages and salaries. See, we are not taken wages and salaries. Okay. So like this, you may get it. So we don't have to, now we don't have to, okay? So now we don't have to verify because we already done it. So we found out wages and salaries, there are 15 line items, right? So we have got all the 15 line items, 67109. 67109. So we have taken all the 15 items. So that is how we have to check, okay? So when we have to cross check, we have to put the ticks like that and then we have to cross check. So be careful. So 1, 2, 3, 4 plus 1 equal 8 plus 3, 7, 6, 5 plus 4, 7, so when you subtract this from this, 7, 8, 9. 7, 8, 9. Perfect. Okay. This is the answer, 7896. This is how it is. So we have finished activity 7.2. So you can just have a recap like statement of profit was always write the heading. So revenue, sales minus sales returns. So write the item this cost of sales, inventory, purchases, purchase essentiality, goods, inventory at the end. So write down everything, then you get one figure. So this one and this will get gross profit. To that you add other income. You will get one value. So from that you subtract all the other expenses, So you take out all the expenses, you add all this, you put it here. So because it is minus, you have put it in bracket. This minus this will give profit. Okay. So this is how it is. So now we can So this is the end of activity question 7.2. Activities 7.2. So we'll catch up in the next class. Till then, have a good day. Goodbye. Dear friends, welcome back to Shasha's virtual classroom. So activity 7.3. Produce a statement of profit loss for Samara that shows the gross profit and profit and loss for the Samara. Who is the Samara? Just let us have a look. It must be somewhere here. So a trial balance has been prepared for Samara. So see, okay. So this is the one. So a seller of women's clothes 2020. Okay. So rent and rates is given. So here in the question they have given everything like this is an expense. This is asset will go to statement of financial position. Revenue is given. Other revenue discount received. Okay. So this is other income. So this will go to other income. So then carriage outwards expense, sales revenue, inventory, 1st April 2019, 1st May 2019. So is there anything new in this? So inventory at 1st May 2019, electricity, sales return, commission received, purchase returns. Discount allowed, purchase received, receivables, wages, drawings will not come. So that will go to statement of financial position. So motor expenses bank. So no much unique items. So I think you can try this question on your own. So even then, let me be just quick. Let me just finish it fast so that you can cross check with the solutions. So this is very important topic. That's why I am doing this. So let us continue. Okay. So we'll start with income statement, statement of profit or loss. So first revenue, then the sales. Total sales. $40,800. Sales returns. P20. So this one is this.
Receive the purchase returns. Yes, purchase returns are also there. How much item? So carriage inwards. Inventory also you have taken. Let's check if carriage inward is there. Carriage inward is there. So carefully you have to see, don't miss out any item. Inventory at 30th April, closing inventory, we have to subtract. So 3760. So that will be 1930. Yes. So this will give you, this is gross profit. What is it is? Gross profit. This is gross profit. So this we add other income. So what is other income? Commission received. Discount received. Discount received. Commission received. How much is discount received? 50. Commission received. Discount received. Commission received. 50. 2340. Commission received 2340. Commission received 2340. Okay, correct. So this is 2390. So you have to add here 2390. So this will give this plus this. Equal to 22 to 20.
profit plus gross profit plus other income. So there is no name for this particular line item. So forget it. Then expenses. To take out expenses. What are the expenses? So let us write all the expenses one by one. And the rent and rates 480. Carriage about 310. Electricity 1180. Electricity. Discount allowed 60. Wages 9700. Motor expenses 660. So now you add all these expenses. 480 plus 310 plus 1 plus plus 9 plus 6 under 390. 1 2 3 9. So 20 to 20 to 20 minus 12390 will be 9830. This is profit. This is profit. So remember, so this is that's all. So very simple question. So let us take a picture of the profit because we need it in the next activity. They have asked for the same activity they asked you to prepare statement of financial position. So take down the number 9830. You keep it securely. Safely means just remember it. And anyways, if you are doing it in a notebook, then it will always be there. So you can have just check and you can use it. Okay, so this is how it is. So just let's once again you can just cross check with the solution. So before attempting any of the questions, so my request is that you try answering the question on your own, then you cross check with the solution. So the same way we will be even doing the question papers also, like you will have to try on your own and then you have to cross check. So possibly we will discuss a lot of concepts. We will, if you have a look at all of my, if you attend all my virtual classrooms, obviously it will be full-fledged discussion on various topics, including question papers, whether it is A levels, AS levels, even IGCSE also. So please refer my channel to your friends and relatives whoever are studying in A levels IGCSE, so that it will be helpful for you, and vis-a-vis it will be motivation for me as well. So thank you. So you can just finish this, just have a look. So let me know if you have any concerns, if you have any queries or anything like that in the comment section of this video, so that if there are any errors also, please let me know, because even I am a human, and there are chances that you human beings only commit mistakes, so that I can rectify my mistakes, and it will help other your fellow students also. So this is my humble request to you, all of my friends, my students. So this is the end of activity 7.3. So activity 7.3. So see you in the next class. Till then, have a good day, good night, all the best. Dear friends, welcome back to Shasha's virtual classroom. So this is a statement of profit or loss. This is David Hopkins' latest book. So today we'll discuss exam style questions. So similar questions are asked in AS level MCQ paper. So exam style questions. Which of the following should not be recorded? So just let us just have a look. So which of the following should not be recorded as an expense? Not be recorded as an expense in the statement of profit or loss. Yeah, delivery cost is an expense. Discount allowed is an expense. Insurance is an expense. Drawings is not an expense. So which of the following is included in the calculation of cost of sales? Carriage inwards is included, yes. Carriage outward is not included. Discount allowed is not included. Discount received is not included. So the initial profit for the year in the statement of profit or losses is 17,500. However, a number of items have been omitted. So these all items have been omitted. So 1800 is this carriage inward. So discount received is 6200. Sales return is 4100. So which are the minus items? So carriage inward will, so loss, the initial profit. Okay, so initial profit. So there is a profit. So profit is 17,500. 17,500 is the profit. So carriage inward is 1800. So it is an expense. Whether it is a forming cost of sales or expenses, it is always an expense. So that will go to reduce the profit. So it will reduce the profit 1800. So discount received. Discount received is other income. So which increases. So increases the profit. Sales return. Sales return is reverse of revenue, that is minus sales. So this will decrease the profit. So just let us just calculate 17,500. 17,500 minus 1800 plus 6200 minus 4100. So 17,800. 17,800 is the answer. So then after this, you have a trial balance. I mean, the trial balance extracted from weeks 31st March. So let us just discuss this. So I'm not going to work out this. I think you can work out this on your own. What is it asked here? So during the moment taken goods costing 2775 for his own So this one you have to subtract from purchases minus this. This has not been recorded in the books. Okay, inventory at 31st March was 1900. Okay, so this you have to subtract. Then let us see what are the other items. Bank, this will go to statement of financial position. Bank loan will go to statement of financial position. Capital will go to statement of financial position. Carriage inwards, that is cost of sales. Carriage outwards, expenses. Discount allowed expenses. Discount received other income. So drawings, statement of financial position. Fixtures and fittings, statement of financial position. Heating and lighting expenses. Inventory. So this is cost of sales. The land and building, statement of financial position, expenses, office expenses. Office furniture will go to statement of financial position. Trade payables will go to statement of financial position. Trade purchases will go to cost of sales. Purchase returns, cost of sales. So trade receivables will go to statement of financial position. Revenue, sales is nothing but sales minus sales returns. So this is nothing but revenue. So this should be subtracted from revenue. Wages is expenses. Again, closing inventory will go to cost of sales. So that's all. So now you can try this question on your own. So if you have any doubts, you can please let me know in the comment section. So it's very simple, you can do, because we have to do a lot of other stuff. So I'm not wasting time on doing this because it is a very simple question. I think you can do this on your own. Okay, so this is the end of lesson statement of profit or loss. So we will be continuing statement of financial position in the next class. Till then, have a good day, good night, take care. For international curriculum like IGCSE, O levels, AS levels, and A levels, clear understanding of the concepts, remember, correlate, application skills is a must. Proper practice and training is very prerequisite for scoring A+. Dear friends, welcome back. So today we'll be discussing accounting concepts. So this is lesson number 9 in David Hopkins. Lesson number 9 in David Hopkins. Okay. So you can read the book and you can understand most of it. But let me just explain to you in layman terms like how you need to understand the concepts. So you need to understand the concepts. You can just read the book and you can understand, but let me have a brief overview. So the need for rules. What is the need for rules? So rules must be followed because accounts are used everywhere in the world. So different people should be able to understand what one person is telling about their financial position, financial results. So everyone in the world should be able to understand the statements prepared by any part of the country or any part of the world. So that is why we have to follow certain rules. So the rules are followed uniformly. So accounting concepts. So accounting concepts are again the same thing. Like some criteria is mandatory to be followed in preparation of books of accounts. So that is what is accounting concepts. What is duality? Duality means duality says according to duality, every debit has a credit. So the it acts like a check. It acts like a check on the arithmetical accuracy and try to be more authentic and clean. Okay. So business entity concept. What is business entity concept? According to business entity concept, even though the owner of the business is the person who is running the business, he is considered as an outsider. So that is why the concept of capital and drawings come. Capital and drawings. That is where the concept of capital and drawings come. So similarly, all the transactions from the recorded from the business point of view. So that is what business entity concept says. Money measurement concept. What is money measurement concept? According to money measurement concept, everything should be measurable in terms of money. All the business transactions should be measurable in terms of money. It cannot be recorded in kind. It cannot be recorded. No transaction can be recorded in quantitative or qualitative terms. It should be always measured in terms of money. So money means either in dollars or pounds or whatever. So historic cost. So normally the transactions are recorded at historic cost. So suppose one item has been purchased some 10 years back, it will be recorded at that price itself and that will be carried over. So we cannot assume and presume, we should not apply the current cost, the realizable value or whatever. So normally everything should be recorded at historic cost and that should be shown in the books of accounts. What is realization concept? Say realization concept is as soon as a sale is made and once the invoice is raised, it should be recorded as revenue. It should be recorded as revenue. But in case of goods sold on approval, goods on sale or approval. So what happens is, it should be recorded as the goods must be recorded as sale only when. So what is goods on sale or approval? What is goods on sale or approval? So what happens is a person sends goods to another person on the condition that if the customer agrees, yes, the goods are of proper value, I have accepted, then it becomes a sale. So what happens in case of goods on sale or approval? So the goods are sent to the customer, the goods go out, and he will receive the goods. Entries are made in the stock book, but it will not be recorded as sale. So it should be recorded as sale only when the customer gives his consent, approval. Customer gives his consent or approval. So then only it will be considered as sale. Otherwise, it will not be considered as sale. It will be considered as goods in transit. Okay. So it should not be considered as sale itself. Goods on sale or approval. Consistency. What is consistency? See, there are certain rules, certain principles which the accountant follows. Suppose, let us say there are two methods of providing depreciation. One is straight line method and one is written down value method. So, what does the rule say? If one person follows, if the company follows straight line method, you should be following straight line method several years. throughout the years. You cannot shift from straight line method to return down value method, or from return down value method to straight line method. Or if you, when you come to management and cost and management, there you will come with something across FIFO, AVCO, method of valuation of material. So FIFO method, you should be following FIFO method. You cannot interchange to AVCO or vice versa. So they should be consistent in following the accounting principles. If they are following FIFO method in valuing inventory, they should follow FIFO method in valuing inventory. Suppose if they are following AVCO method, they will be following AVCO method of valuation of inventory. So that it should be consistently followed. The rules must be consistently followed. Rules or methods. Methods must be consistently followed. So what is materiality? Materiality is dependent from person to person and from business to business. Suppose if it is a large company, small items may be written off as an expense. Small items may be written off. But if it is a very small company, then small items are also can be recorded as assets. So based on what type of business it is and what is the magnitude of the importance of that particular item, the items are recorded. So that is why it's called materiality. How material the particular item is. Based on that, the transactions should be recorded. Matching principle. So this is also known as an accrual principle. So matching principle means all the assets and liabilities, all incomes and expenses must be belonging to one specific period. So you cannot postpone or prepone any expenses or incomes or assets or liabilities from one period to another period in recording anyone from one period to another period. They should match specific period. Specific period is very important. So periodicity. So a specific period. They should match all assets, liabilities, expenses and incomes should match for the specific period. If they are not belonging to that period, they should be taken out. So that is what is matching principle. What does prudence principle say? Prudence principle says that all probable losses should be accounted. All probable or prospective. Prospective losses should be accounted, whereas all probable or prospective income should never be accounted unless if they are realized. So prudence concept. So it is also known as conservatism concept. So it is also known as prudential concept. So according to that, all probable or prospective items, if they are expenses or losses, they should be accounted. They should be considered and recorded in the books of accounts. Whereas